My name is Camilla Bullock, and I am the CEO at the Emerging Payments Association Asia. And I'm delighted to welcome you all to today's workshop on the topic of open data. We are hosting this workshop in collaboration with the ASEAN Bankers Association and the Asia Pacific Financial Forum. And we will soon hear from Mr. Kobasak Dujandi, who's the Secretary General of the Thai Bankers Association and the chair of Asia Pacific Financial Forum, and also from Julius Caesar Perennis, the coordinator of the Asia Pacific Financial Forum. We are grateful for the collaboration with both of those organizations, and for all of you on the call that you have joined today, either you being from the official or the private sector, to have this discussion on the topic of the vision, creating a holistic system for open data, starting now and building for the future. We have lived through a lot of change during the last couple of years, and it's many financial executives that probably thinks that our industry is moving too fast. There are new regulation, new technologies, and new challenges. But on the other hand, there are also several people who thinks that in the field of open banking, things has not moved fast enough. And the open banking has far from reached its full potential yet. And the word yet is very powerful here, that open banking is not a goal or a destination. It's a mean to an end. And the end is to meet customer expectations or exceed customer expectations while improving operations. And access to financial data unlocks so many opportunities to improve experience and create more inclusive financial ecosystems. And open banking is evolving and expanding into open finance, and which in its turn going to evolve into the power of embedded financial services. And we are expecting that finance, payments, loans, insurance will all become completely invisible to the customer. And this has the potential to change the role that financial institutions play in our lives, from providing financial services to be enablers for all industries. And with that in mind, the next step is the evolution and the process to create an open data economy. And in the report that we admitted to the ABAC meeting in Vancouver in May, after our first open data workshop, we wrote, in order to facilitate open data economies, key principles need to be established to ensure alignment and consistency. These consistent principles may include privacy, data sovereignty, individual rights, corporate and government assets. We believe that establishing key use cases and share best practice is a way to move towards the vision of open data to create value for consumer and businesses in APAC. And unlike technology standards, the community will not be able to establish open data without government support. Operating consistently can help reduce regulated burdens across the markets, and a common approach and knowledge that we can achieve more together than apart. The best architecture in the world are built on strong foundations, and hence we're here today to discuss the inputs on the most important building blocks for a future of open data ecosystem that is accessible, scalable, and interoperable. And we're here today to learn about what has worked and not worked in other jurisdictions, and to better understand how to create a framework for an in-market and between markets that will enable and facilitate secure value creation from open data. We have an exciting program today, so we should get started straight away. But I just want to introduce quickly Nelixa Devlukia, who you will meet in a few of the different sessions today. So Nelixa is an EPA ambassador, and she has previously worked at the Financial Conduct Authority on all matters related to the PSD2, and also for the open banking implementation entity. So you will meet Nelixa later today, but now I would like to hand over to Mr. Kobasak Dujandi.
Thank you. Our esteemed organizers from the Emerging Payments Association, colleagues from the ASEAN Banker Association, ABAC, and APFF, ladies and gentlemen. Good morning, good afternoon, and good evening to you all. It is my great pleasure to welcome you to this roundtable, which will discuss our work on open data. Open data is an expanded version of open banking concept implemented in Europe through the Payment Services Directive 2 or PSD2, as well as in a few other markets. While the classic open banking involved one-way flow of permissions consumers' data from banks to the third-party service providers, open data involves a multi-directional flow of data across the market participants. At the center of the open data ecosystem is the individual consumer who has full control of his or her data and able to permission its sharing in order to more conveniently access a wide variety of services using digital channels. Some economies have already started the journey where almost all initial use cases are financial services. However, implementation varies across markets. Some are government-led, others are industry-led, and some are more on the prescriptive side. Others more free-form in their approach. The focus of efforts are domestic, and there are no common cross-border standards as of today. If designed properly, an open data system can enable competition and empower innovation. It can enable better consumer outcomes and provide an ecosystem for fintech firms to collaborate with banks while supported by digital enablement and access. Open data support wider access to financial services. It can promote financial inclusion in developing economies. If access to the internet, digital and financial literacy, and adequate consumers' protection are addressed. As was concluded in our roundtable earlier this year, 4 things key to the successful development of open data ecosystems. The first is the whole of government approach to ensure coordination and synergy among multiple authorities with varieties regulatory objectives, such as prudential regulators, central banks, corporate and conduct regulators, consumer protection agencies, digital ID authorities, privacy commissions, industrial self-regulatory bodies, and financial institutions that have their own rules and policies. As we expand beyond financial data, the list gets longer as we include various authorities regulating different industries. It is important in reducing the compliance burdens and costs for market participants, and also in laying the foundation of cross-border interoperability. The second is the importance of standards, harmonization, and cross-border integrations. While there are a number of emerging standards, such as ISO 20022, W3C, verifiable credentials, OpenID Connect, and PEPPOS in the invoicing space, among others, but difference in implementation and cost to local institutions and decreased utility for consumers. The discussion highlights the importance of the recognition of the standard and the level of harmonization, at least for basic elements of open data, in order to promote consistency and allow firms to exchange technologies, learning, and practices globally. The third is the need to address challenges to active participation in open data ecosystem in developing economy, such as lack of access to the digital world and insufficient literacy, and the huge benefits that these economies can reap from open data if these challenges are addressed. Compared to producers in advanced economy who already have better access to online markets, those in developing economies have more to gain. One example given is that of a rice farmer who with better infrastructure gains access to payments and access to online markets, where he can be able to simply advertise the quality and grade of rice. He anticipates producing benefits from reduced costs through better access to finance and to market for services and suppliers, and get a better price without excessive value extraction by intermediaries. The fourth is the importance of the commercial invoice. Most implementation cases of open banking to date have designed with a purely technical view, but users' access to data remains constrained by various regulatory factors, such as privacy concerns. Since from the commercial perspective, data is not just database, but include transactions, payments, market orders, invoice, notifications, and many others. It is important to adopt implementation approach that pay attention to the commercial aspects of open data in order to enable businesses to provide more significant benefit to consumer. An important conclusion from all these themes is the need for coordinating guidance from governments to agencies and private institutions in sharing consumer data for the benefit of individuals. These cover agreements on common standards, building the infrastructure, and solving critical legal, technical, logistical problems. To facilitate the world where we can share information freely, confidently and securely within, and ultimately across borders. Key principles include those government privacy, data sovereignties, and individual rights need to be established to ensure alignments and consistency. Given its weight in the world economy, APEC has potential role to play in developing a common standards and harmonizing basic implementation of open data among its members, and eventually to coordinate with Europe, which is now moving forward with its own PSD3 in promoting a global ecosystem. These are the issues that we will discuss today. I encourage everyone to participate actively in the discussion to help us refine and finalize our ideas and recommendations, while APEC will include in our report to APEC Finance Minister this year. I look forward to the fruitful and successful roundtable. Thank you very much for your kind attention. Thank you.
Thank you very much, Mr. Kobasakdejandi. And with that, I would like to encourage everybody to take an active part of today's workshop. So please use the chat, both for your ideas and any thoughts you might have or questions. We're going to move into the first session, where we're going to hear from Ralph Braga, who is the CEO and CTO of Radium. He also used to be the ecosystem and trust framework architect for the OBIE, and he's a digital identity specialist. This session is going to be moderated by Jamie Leach. Jamie Leach is the domain lead, regulated data at Cascal. Formerly, she was the regional director in APAC for FData, and she has worked for the Open Data Institute, and she's the founder of Open Data Australia. So I will hand over to Ralph.
Hello, everyone. Thank you very much for having me, and it's a very real pleasure to be here. I have prepared a few slides, if that's all right, Camilla, to just quickly aid this discussion. So I'm just going to quickly do a screen share. Excellent. Thanks very much, and thank you very much for the kind or the introduction. It really did help set the scene. So I'm going to talk a little bit about some of the ecosystems that Radium has been involved in. As Camilla has just said, I was the trust framework and ecosystem architect for the UK open banking implementation entity, but Radium has been involved in building ecosystems now for the better part of 6 years, and we've been actively involved with the Australian Banking Association, helping them chart the course towards the future evolution of the consumer data right. We've worked for the Brazilian Open Banking Program, where we run their central trust infrastructure, as well as providing editorial and consulting services to help create the Brazilian standards. We also now work for SUSEP, which is the open finance, the open insurance regulator, as part of Brazil's foray into open insurance. And all of these different markets that we've been involved with have all got the same sort of key principles. They need to be accessible, scalable, and interoperable. And those core principles that we're trying to achieve are really part of the same core functions of the greatest and largest ecosystem of them all, the internet. So all of these ecosystems do really need to make sure that they adhere and hit those three main sort of goals. So in order for them to be accessible, we really need to be using global standards and well-defined local functional API standards wherever possible. They need to be conformant and certified so that they actually work. And they need to be familiar, well supported, and standardized so that when you come along and try and use these different ecosystems, they just function. There's no problems. There's no issues with connectivity like there was with the browser wars of the early 1990s, where we all remember where certain websites work better with Netscape Communicator and other websites work better with Internet Explorer. So standards are really required for security and function. And there are several ways that we've seen these programs evolve. And if we come back to the original implementation of the UK OBIE, the very first implementation of the open banking standard resulted in 12 distinct implementations. Open banking at the very, very start was not a consistent, homogeneous implementation. And the reason I say it was 12 might be surprising to quite a few people, because there was only 9 major banks that were compelled to deliver a consistent major standard. But even within those individual banks, they had different divisions, different technology sets. You had private banking, retail banking, some based in different locations around the world, and even they couldn't agree and actually implement a consistent standard. And so what you can see is you can either end up with one of these three options. You can either end up with every bank delivering a standard, but it's not broadly interoperable because everyone has misinterpreted the standard or reinterpreted the standard as they see fit. Some markets go down the aggregator. Somebody sticks themselves in the middle and acts as an ultimate middleman that tries to provide a consistent API for everyone and tries to abstract these different implementations of standards away. And then on the right-hand side, you have what is the target state, that panacea, where every single provider of APIs delivers a consistent, homogeneous standard, which really delivers those economic benefits that we just talked about. But standards alone aren't just going to get us to that target state. Every single successful ecosystem has enablers. And those enablers really are the key points that drive through successful ecosystems. They include reference implementations that can be used as a litmus test, and also to be something to throw rocks at by the ecosystem to say, this is what we think the standard should mean. And they also include a very, very strong testing and certification process and governance process that means that you can drive through, or you actually can realize those benefits by driving through to that consistent ecosystem. Every single ecosystem that we worked on starts with the same major building blocks. You've got a regulator and a controller. You've got somebody that's got some data, and you've got somebody that would like access to that data in order to bring those propositions to market. And in all of the major successful ecosystems, the following additional services are provided, usually by the controller or regulator, in order to make sure that you end up with all of the benefits that an open ecosystem can provide. And they include a strong conformance suite for data providers, a strong conformance suite for relying parties, but also a trust platform or directory that pulls together all of the different services needed to build an ecosystem. And that trust platform directory is primarily a set of services that is geared towards the controller and regulator, but it is used by both parties in order to solve some of the challenges that exist at the core of each of these digital ecosystems. And so if we look at the 3 different case studies, they all have a very, very similar story. Service providers wish to consume data from data providers. Data providers have got to solve some challenges to firstly identify service providers, The ecosystem controller is really trying to make sure that costs and governance are followed by all members of this ecosystem and are really the ones that are responsible for trying to drive through those market outcomes. So you've really got three core actors within an ecosystem. The trust platforms / ecosystem controller, sometimes which can be a regulatory body, or it can be a body that is set up like the UK OBIE on behalf of a regulatory body. You've got data providers, usually banks, and you've got service providers that are trying to consume those data. And all three of them have a key and critical role to play. And if you can go and get each of those providers to actively engage with each other to provide the necessary functions and services that each other's needs, then you can see real world ecosystems evolve. And in all of the major ecosystems around the world, these services and this three-party model has started to really start to function. But if we look at the the case study between the UK, Brazil banking and Brazil insurance, you can see that it starts getting faster. So in the UK, we had to design all of these services, all of these trust frameworks, all of this directory, all of the necessary underlying standards from scratch. We were all starting with a blank sheet of paper. And it took about 6 years to go and get the UK into a state that it currently is today. In contrast, we were able to do the same thing for Brazil's open banking in about 6 months. And then again, for the Brazil insurance industry, we were able to do that in about 6 weeks. I'm going to start with the summary slide now as to how we were able to do that using open standards and using tried and true patterns. But these are the three core challenges that every single ecosystem is trying to deal with. And these are the main reasons why they are now faster and cheaper to implement. Tackling the who of who you are dealing with in a digital distributed ecosystem is usually 60% of the challenge. Working out who is allowed to engage in this ecosystem. How do you identify them? How do you authorize them? How do you know that they're allowed to engage in this market? Well, in the UK, banks had to work with their vendors to design and implement the standards and the trust framework. There wasn't anything. There was literally a blank sheet of paper. And Radium at the OBIE had to design all of the trust framework and supporting services for the UK OBIE from nothing. When Brazil came along, banks and their vendors were ready to go. And I think it's a key point here is that when we're talking to two banks, we have to recognize that a large amount of the work that we're proposing that these banks need to do won't actually be done by the banks. They'll be done by banks' vendors. And so being able to make sure that the banks are supported by their own technology and providers was a real big win in the UK. But we still had to tackle all of that from scratch. The second part of it is deciding how do you communicate? Well, that was 30% of the challenge. And again, UK banks had to work with their vendors to design and implement this. FAPI didn't exist. There wasn't widespread adoption of OpenID Connect for financial grade APIs. There was a significant barrier to achieving the necessary security bar in order for banks to be comfortable to sharing their data. But again, by the time Brazil rolled around, banks and their vendors were ready to go with modifications. And finally, you get to the what. What are you allowed or required to share? And this is the small part. This is the easy part. It's about 10% of the overall challenge is building functional APIs. If you have a solid basis for security, consent, authorization, you know who you're dealing with, and you're capable of, everybody is capable of proving those interactions, then building and accelerating and building a plethora of API propositions and API services is very, very simple. It's also one of the areas that's always going to need to have a local flavor. For example, in Australia, you've got a BSB. In the UK, you've got a sort code and account number, and little things that are different between functional jurisdictions. They're easy to work around, but there are always little differences between what makes up mandatory fields on an account record or a transaction record or a payment record. In addition to standards, testing and certification, I can't bang on about this enough. In each of the major ecosystems, an ecosystem controller or regulator has provided and invested in comprehensive testing and accreditation services for both parties, both the providers and the consumers. And as the successful ones, they've mandated the use of and certification of the software and services on an ongoing basis. Certification is not just a one and done. just in the same way as APIs are not just a one and done. They constantly evolve, they constantly change, and it requires continuous investment to make this digital economy a reality. The key takeaway for conformance and certification, though, is that you definitely need to require testing in production. Pre-production testing is demonstrably insufficient. In every single market that we've been involved in, we've seen everybody go through the same sort of approach. I don't want to test in production because my production systems, and I don't have test accounts in production. So I'm going to require certification in my sandbox systems, and I'll write a letter and I'll sign a document to say that my sandbox systems are exactly the same as production. And then it doesn't work. And that is always the case. We've always, every single market, we're now going through the same process in Brazil. There are always challenges, just little differences, but they're enough to make interoperability testing challenging in UAT. The other thing about a good and solid testing and certification process and testing framework is that any participant should be able to use the testing and certification framework to be able to test any other system's compliance to the standards. If the testing and certification processes are open and available for everyone to use, and you're just acting as a participant, any other participant will be able to prove the compliance or non-compliance of any other participant. And that is an incredibly powerful tool to be able to enable an ecosystem to self-certify, to be able to call each other to account. It also acts as a great means for regulators to be able to simplify their lives, to say, whenever any disputes arise, because they can simply turn to one bank who's made an allegation of non-compliance against another bank and say, you've got the tools, prove it. Give me a certified test run that shows that that bank is non-compliant, and I'll do something about it. And what that does is it starts ironing out a lot of the different challenges when it comes to those issues that inevitably always arise. So I'm pretty sure I'm out of time. Key takeaways for me are always going to be: don't reinvent the wheel. Use proven international security and authorization standards. That's the reason why these ecosystems are now faster and cheaper to implement, and they're a lot faster and cheaper to implement. A lot of people get quite spooked about the amount of money that the OBIE has spent building open banking in the UK. Well, Brazil, it's a fraction of that because they're not reinventing the wheel. They have the capabilities that's delivered turnkey to them to enable them to deliver their ecosystem, which means that they can concentrate on what they're delivering, not how they're delivering it, not how they're securing it. And for the most part, they're broadly compatible with both the Australian ecosystem, but also the UK. And the ecosystem controller or regulator has a really big role. Most successful ecosystems that we've seen emerge, where we've seen the regulator really lean in, that they recognize that they have a role to play to make sure that this ecosystem functions, and that they have the capability to reduce significantly the costs associated at a macroeconomic level by solving some of these core challenges. Provide a simple means for businesses to prove that they are allowed to engage in this ecosystem. Provide a means for these businesses to prove what they're allowed to do in this ecosystem. Solve discovery for your participants. Make it easy for them to find out who is in your ecosystem, and then solve quality and consistency of service for participants. In the UK, you ended up with we were better than Europe. In Europe, you ended up with the rise of a lot of intermediaries and a lot of middlemen that were responsible for solving some of these problems that a lack of standardization and a lack of consistency resulted in. In the UK, you can engage with open banking with the 9 biggest banks, pretty much with a library. In Brazil, you can do it with 260 lines of Node.js, public, free, open source libraries that give you access to the entire financial services market. And that's the objective that we're trying to create.
Thanks very much, Ralph. That was amazing. I think you've already answered the 5 questions that I was going to ask on behalf of the workshop, but just looking at time, I would like to pose one question. Obviously, not every regulator in the world has access to yourself. Well, they could if they wanted to, but right now you're probably not working for all of them. So if you were going to leave them with one tip of where to start to create true interoperability, we have global brands, we have global trade, we have consumers that literally have services across multiple jurisdictions. What would you think is the most valuable starting place for regulators to try to create that interoperability?
Cool. Start with the hard ones. don't tackle security yourselves. Delegate the creation of appropriate standards to appropriate standards bodies. Allow banks and allow your ecosystem to concentrate on what you need to do, and allow the industry and allow other standards bodies to help you solve the other challenges. The OpenID Foundation has been brilliant and is a continuous source of the evolution and continuous improvements in terms of how you secure and share data.
That is fantastic. Now, Ralph, you had some amazing slides there. I don't know if you're willing to share them with the workshop, but obviously if you are, if you could send them to Camilla, and I personally would love to get a copy of, those first few that you put out there. I think they're really, really just easy to follow tips on how to get started. But please, everybody join me in thanking Ralph for his time today. And there's going to be silence. I'll clap because everyone's got their microphone off. Here we go. They're coming through. Thanks, Ralph. Hope you can share your presentation. Wonderful. Now our next panel discussion is one that I'm really excited to have the privilege of moderating. This next one is from open banking to open data, the evolving landscape. And we're going to compare different markets, regulations driven versus market driven, and the current status of the market with reflections of pros and cons of that approach. So I'm going to ask three speakers to join us, starting with Mr. Novianto, the Deputy Director of Payment Systems Policy Department, Bank of Indonesia. Mr. Novianto, would you like to lead with your opening thoughts?
Okay, thank you, Jamie. Good morning, good afternoon, good evening to everybody, wherever you are. Thank you for the opportunity. It's truly an honor to be sharing the experience and approach of Indonesia. Let me start by saying that we were very much driven by technological advancement, the innovation, and the various products and services, especially in the financial sector. We see some rapid changes and rapid innovation in most areas. In the payment system area, we recognize at least three main areas: the payment instrument, the payment channel, and also the infrastructure. Nevertheless, we see that there are still several challenges that occur in the payment system industry. Among others are high fragmentation in the ecosystem. There's also high gap in the capabilities between players, of which all of these result in so many inefficiencies in place in the payment system industry. As a response to that, in 2019, Bank Indonesia issued the Payment System Blueprint 2025. The blueprint was intended as a navigation tool and a guideline for the direction of the payment system development in Indonesia. There are 5 main initiatives under the blueprint. The first initiative specifically deals with open API standard, and the other initiatives deals with other areas within the payment system, not only the infrastructure, but also the regulatory reform and data optimization. Then as a deliverables of the first initiative, in August 2021, we've managed to introduce the national standard for payment open API, or we call it SNAP, SNAP. The standard was a product of collaborative efforts between BI as a regulator and industry representative. There were representatives from banks, representatives from payment fintechs, e-commerce, and also industry association. So this is a collaborative efforts that we can create the standard. There are 3 subject areas that we standardize. The first one is the technical and security standard. The second one is the data standard, and the third one is the governance standard. There are at least 22 services that we standardize, and under those 22, we also define 81 sub-services under 5 service category. The first category is the registration API. The second one is balance inquiry. The third one is the transaction history. The fourth one is the credit transfer, and lastly, debit transfers. So we've covered all the potential services of the payment API that can be standardized. Hopefully, this open opportunity for new business model that can use this API, not only for payment purposes, also for other purposes. For example, you can use the API balance inquiry for other services, for, let's say, account aggregator. You can also use the API transaction history for creating the credit scoring, and so many opportunities for new innovation basing on the standardized API. We also believe that by doing the implementation of the standard, this could be one of the solution for our cases in Indonesia, where we have so many fragmentation in place. There are hundreds of banks, there are hundreds of fintechs and new still coming in. So the fragmentation is very high. So we believe that the standardization is one of the key where we can solve integration of the domestic. At least the first steps will be integration of the domestic Indonesia digital economy ecosystem, because there will be no integration without interoperability and interconnectivity, and there will be no interconnectivity and interoperability without standardization. So that's what we believe. By doing also the implementation of standard, we can believe that we were promoting the interlinkage between bank and fintechs in a more manageable risk manner. We can also drive more innovation and more efficiency by implementing the standard. Nevertheless, we believe that there's high gap in the capabilities within the industry when they have to implement the standard. So that's why, as you can see from the slide, we set up for a milestone for the implementation of the standard. It begins with the first milestone in June 2022, and the last milestone will be June 2025. So there are 3 years of implementing of the standard.
Mr. Noviento, I'm sorry to interrupt.
Okay.
But I'm going to have to cut you off there. We'll come back to our answering questions in a second. Thank you very much for that.
Okay, thank you.
Amazing presentation. So we'll be back with you in a second, but can I ask our second speaker in this panel, Mr. Ken Chua, Deputy Director of FinTech Infrastructure Office, the Monetary Authority of Singapore, to please share his initial presentation for 5 minutes.
Yeah, thanks for having me here. I'm Ken from the Monetary Authority of Singapore, and today I'll provide a very brief sharing on what we have done in the space of open finance in Singapore. Right? So this slide is really to frame the big picture around the enablers for innovation, and this can be applied to open finance, which is the focus for today's sharing and discussion. So for example, the need for the relevant digital infrastructures, how we should collaborate with the broader ecosystem on experimentations and also to drive digital adoption, as well as to constantly looking into our regulations and see whether these regulations remain conducive to support the innovation, right? So specifically, if we were to examine the digital infrastructure pillar in the context of open finance, there are a few key pieces which are fundamental to enabling and driving the open finance agenda. I've listed 4 here, right? First, about identity. How do we authenticate the person? And this applies to individuals as well as the individuals behind a business. Second, APIs, which is fundamental to enabling connectivity as well as data exchanges. Third, data. We talk about data protection, user consent, and how we can move from open finance to eventually open data. And finally, on the payment piece, because this is the most common use case in open finance, and I'll have one example of this as well. So the next few slides is really just to provide a very high level kind of our journey into the open API or open finance journey, right? From co-creating the finance as a service API playbook with the banking industry, to collaborating on industry-wide projects with financial institutions, as well as the relevant government agencies. I'll share more details on the subsequent slides for each of these projects. The first one is on the Financial Industry API Register. This is something that MES built with the aim to serve as the initial landing site for open APIs available in the Singapore financial industry. The register is updated on an ongoing basis as our FIs make available their open APIs. So we have classified the open APIs into four main functional categories, as you see on the screen: product APIs, sales and marketing APIs, servicing APIs, and transaction APIs. And since we started tracking this in 2017, the number of open APIs actually have grown gradually in the initial years and started to accelerate in 2020, as you can see on the screen. This shows that FIs have over time understand the need and benefits of having open APIs to stay relevant and competitive in the digital economy. The next project is API Exchange, in short, APIX. So this is really a global open architecture platform that supports financial innovation and inclusion in ASEAN and around the world. Right? So APIX has evolved quite a fair bit since it was launched in 2018, but primarily it offers three key value propositions to enhance collaboration between FIs and fintech firms. Well, first, discover, right? It allows FIs and fintech firms to discover and connect with one another more easily and more cost effectively on the global marketplace. The platforms can also support hackathons to solve industry and business challenges. The second point is on dry run. Basically, FIs and fintech firms can design experiments to validate digital solutions in different scenarios using APIs in the APIX sandbox. This will facilitate FIs' adoptions of APIs and enable them to rapidly deploy new solutions to underserved markets. And finally, decide. Right, this is really a feature that allows FIs to further ascertain the fintech firm's reliability and capacity. And this is done by allowing them to obtain verified credentials of the fintech firms based on golden source information stored on the blockchain.
Sorry, Ken, I'm probably going to have to cut you off. That's 5 minutes. It goes really quickly, but we will have time for questions in a second. So if I can just ask our final speaker, Miss Emily Martin, the Assistant Secretary, Policy and Engagement Branch of the Australian Treasury, to step forward and present for 5 minutes. Ken, you might have to stop sharing your screen.
Okay. How's that? Yep, great. Hi. Good morning, good afternoon, good evening, everyone. I'm going to try and meet the KPI of less than 5 minutes. I probably different to the previous two people on the panel. I'm just going to talk about the progress that we've made in Australia over the last 12 months or so, and then give a brief update on what we're working on now. So probably more fitting in with the evolving landscape description that Jamie had earlier. So in Australia, of course, we have the consumer data right. And from the outset, it was designed to apply across the Australian economy, starting in the banking sector. So here we have our open banking working, where consumers can choose to securely and conveniently share their banking data with accredited and trusted recipients to access better value products and services tailored to their individual circumstances. So implementation of CDR by the 4 major banks is now complete, and implementation by non-major banks also progressed over the last 12 months, and all banking products have now been phased in for the non-major banks. And the rollout of the CDR for the banking sector will be complete in November of this year, when non-major banks will also be required to support joint accounts, business consumers, partnerships, and secondary users. Another significant development has been new rules to support both increased participation in the CDR by businesses and empower consumers to share their data easily and securely. And we made these rules late last year. They introduced new pathways for industry participation by allowing accredited CDR participants to sponsor other parties to become accredited or to operate as their representative. They also enable consumers to share their data with certain trusted professional advisors, including accountants and financial advisors. And they also allow disclosure of limited data insights to any person should consumers choose to do so. So in terms of going across the economy, consumer data sharing in the energy sector in Australia will commence from November this year, starting with the biggest 3 energy retailers. And it's hoped that bringing energy-related consumer and product information into the CDR will help households make better comparisons on their energy plans and access better deals. Also, earlier this year, the communication sector was designated as the next CDR sector, and we're currently engaged with stakeholders on draft telecommunication-specific rules and standards. In terms of the next steps for CDR, we have, of course, we have a new government in Australia, and we have a new minister responsible for the consumer data right. We've had very good engagement from the Assistant Treasurer, Stephen Jones, who is keen to see the momentum in CDR maintained. And while we're still settling some key decisions, I can talk broadly about our work ahead. As I said earlier, the CDR is a framework that has been designed to apply across the economy. So to inform the next stages of expansion of the CDR, we conducted a strategic assessment last year, and the assessment identified open finance as the next priority area for expansion of the CDR, which includes service providers in non-bank lending, merchant acquiring services, general insurance, and superannuation. The strategic assessment also highlighted that expanding the CDR to government data sets and government recipients has the potential to improve public and private sector services, as well as enhancing the user experience and utility of the scheme. As the first stage of open finance, Treasury consulted with stakeholders on non-bank lending as a CDR sector in March this year. We've also been considering how to take forward recommendations of the inquiry into future directions for the consumer data right, and key recommendations included action and payment initiation reforms, which would enable a firm to send instructions on behalf of the consumer to another firm to perform actions, effectively expanding the opportunities of the CDR and delivering more services for consumers. And just finally, because we like keeping very busy, we've also supported an independent statutory review of the CDR, which has been looking into our statutory framework. And we've had a lot of stakeholder engagement, and we expect to deliver a report to government on that soon. So just to summarise, on the horizon for us is continued expansion across the economy, with energy implementation coming up, then telecommunications, and moving into the subsectors that make up open finance, starting with non-bank lending. We also expect to make good progress on enabling action initiation within the CDR framework. For some, this is better known as right access, and we expect to start with payment initiation, and then we finally expect to have work that will follow on from the statutory review into CDR.
Emily, I'm going to have to call time there. Thank you very much.
That's done.
Absolutely. Now, can I ask Ken and Mr. Noviento to join us back on screen? I have put a message out if anybody had any questions, but I guess I'll start. Mr. Noviento, Ken, Emily, 3 different countries, 3 very unique financial services systems and government models. Why is nobody actually approaching open data in the same way as anyone else? There doesn't feel like there's any 2 countries in the world that are actually looking at this from the same direction. So I'm curious to get your thoughts, the 3 of you, as to why this may be the case. Who wants to lead it off? Mr. Noviento?
Okay. Thank you, Jamie. That is a very interesting question. So let me explain why we chose our path. We all know that in the digitalization area, we need one important prerequisite, the digital ID. That is the one thing that we are lacking in Indonesia. So that's why we chose our path, not doing the same way with the other, like Australia, you have CDR, and maybe other countries. We chose our path by doing the standardization first. And by doing that, we try to overcome the necessities of digital ID through building the interconnectivity first, and then we can deal with other areas later on. Probably that will be the something that I can come up with for explanation. Thank you, Jamie.
No, look, I think that is a wonderful, wonderful insight. In fact, digital identity is something that's been hotly hotly pursued in Australia for a number of years. But Ken, Singapore has had a level of functional identity or digital identity over recent years. How important was digital identity in the path that you chose going forward for Singapore?
Yeah, sure. Thanks. So just to explain a bit of our context, our approach has always been not allowing regulations, or rather, we don't allow regulations to front-run innovation. So we let markets to flourish first and only intervene where we see regulations could help, right? Whether to address certain risks or to pull industry together in the direction we think is good. So that is the approach we take for open finance, open banking, or open APIs, as whatever you call it. And we have started that since 5 years ago. We are seeing certain early results of success, where some of the projects I've shared earlier on, whether that is through APIX or the SG Fintech platform, which pulls industries together to open up APIs to facilitate data exchanges within the financial industry. That being said, that doesn't rule us out from taking the regulations approach. That's something that we are still studying. But at this point in time, I think a market-driven approach has worked well for us. And to your questions on digital identity, we are fortunate because we do have a national digital identity in place, and quite a fair bit of our such initiative we leverage on what we have, which is the digital identity to authenticate the customers itself. Yeah.
Wonderful. And now, Emily, you know I'm going to drag you into this conversation as well, especially with cross-sectoral applications. For instance, banking in Australia, you have a customer ID, but in electricity, your account's often tied to a physical premises and a meter box. So the role of digital identity is expected to become increasingly important in the Australian cross-sectoral capacity. Emily, is there any thought to how quickly we think digital identity will start to affect the rollout of the consumer data right?
I think that in the Australian context, digital identity is going to become, as you say, even more important as we attempt to draw data from different sectors across the economy. And then even so, probably more relevant when we move into deepening functionality in the CDR by enabling action initiation. As I mentioned in my comments, we do have a new government, so we are in the process of, and some of those functions have moved across government into different agencies. So we are in the process of bringing that all back together. But it's really important that our digital economy, that the parts of that are joined up, and digital identity is important in the Australian context, and we'll certainly be working with our colleagues on its progress.
Wonderful, thank you. Now back to Mr. Novianto. You made mention of starting with standardization of APIs, and I've personally been watching the API playbook being put together over the last couple of years. How have you seen the market accept, I guess, the playbook? Are you seeing innovation being shared from brand to brand? Has there been any sort of industry-wide collaboration? Do you have any examples that you can share?
Yeah, as I mentioned, Jamie, the standard itself is the product of collaboration between us as a regulator and a representative of industry. So from them, for them, led by us. So that is our approach. Yeah. And then, as I explained earlier, there are some opportunities can be derived from the standard, not only for payment service. As you may know that the standard is specifically for payment processing, but there are possibilities for using the API for other business. Like as I said, you can create business like credit scoring by using the API. There's so many opportunities. It's like a Lego brick that you can create so many opportunities. This is the one thing that we can communicate for the industry. If you're not doing the standardization implementation in the early stage, you will be left behind because others are doing it as they talk to. According to the stages. So this is very important message that we deliver to this. This is an opportunity for you to create more business, to be more interoperable, to be an integrated ecosystem, at least in the domestic side. Thank you, Jamie.
Thank you very much. And Ken, I'd like to get your thoughts. You know, often we're criticised when you standardise things, people are afraid that they lose their competitive advantage or it stifles innovation. Is that what you're seeing in Singapore, or has this standardisation actually created, I guess, greater opportunity for the market?
Yeah, so I think we don't take the standardization route for APIs or open finance. We take a market-driven approach, but I think we focuses more on the foundational infrastructure, right? Things like, for example, the digital ID, things like the national payment rails. These are enablers which we can standardize and it can help the entire ecosystem to flourish. But beyond those, even though we have an API playbook, it is playbook in the sense of the best practices. We don't really mandate the FIs to use them because we kind of understand that each FIs have their own maturity cycle, right? So some may be at an early stage, some might be more advanced than what we are talking about. So we let that space to be more open, and that in a way, I think it brings a good balance between mandating certain parts of the infrastructures and at the same time maintaining certain parts where innovations can still thrive. Yeah.
Wonderful. Thank you very much, Ken. And Emily, I don't mean to keep putting you under the pump, but you know, as the third speaker, it's given me a lot of information. So Australia has taken a very different approach. Australia has been often criticised as being extremely prescriptive in all elements of the consumer data right, from standards to the rules, to the accreditation. Why do you think Australia chose this approach when there were other pockets of excellence around the world? What made Australia unique?
I mean, I think partly, Jamie, it is that we are a country that does impose regulation on a lot of different, you know, I wouldn't say impose. We do have regulation, a regulatory led kind of model across a lot of different sectors. I mean, we had the advantage of looking at what you know, the framework in the UK, and of course we have a really similar kind of financial system to that in the UK as well. So we had the advantage of looking at that model, and then a lot of, you know, really insightful and great reports about how data sharing and data portability should work in Australia. Partly the prescriptive nature of the CDR in Australia is due to the very high consumer protections that we have in the system. And those are really important in Australia. That's what we hear from consumers, that they want those strict privacy safeguards and security in our system. So that is a lot of the prescriptive, regulation that accredited data recipients in Australia need to comply with. But then, you know, we do have this regulatory framework, and whilst it might seem prescriptive, it is a framework that can work across the economy. So we have the one legislative framework, statutory framework. It's quite high level and clear. Then we move down to the rules. And as we move into new sectors, we, you know, seek to keep the rules the same and only make sector specific rules where we need to. And where those rules are needed for the operation of CDR in that sector. And then, of course, we have the standards, but we comply with, we have, you know, the highest kind of security and privacy safeguards in our system. And that's what Australians expect from data sharing.
Yeah, look, thanks, Emily. Sorry to make it seem like I already know the answer to all these things, but for the sake of the audience. So, Mr. Noviento, Emily raises a great point. Australia has been so specific about so many different elements, and part of the reasoning is that the end consumer, the end customer, will be more likely to utilise these services if they trust them, if they have confidence in their safety. What are the early adoption in Indonesia showing you as far as consumer trust? Is this going to be an issue as this system rolls out further across the country?
Yeah, that is very important question to address. Yep, but as I mentioned, we just finished the rollout process in last June, just a few days ago. So we cannot really see the impact of the standardization first, but we believe that, as I mentioned, that this is the standardized for payment purposes. Of course, we will expect the impact will be some efficiencies and some opportunities of new businesses in the payment area, and then we can expect expansion of the use of API in the other direction for doing better in supporting the inclusion, whereas inclusion is still a big homework for us. Thank you, Emily. Jamie.
So we'll come back and see you in 12 months' time, Mr. Novianto, and see how the rollout's going. Ken, I'm going to ask you the same question. Now Singapore is renowned for people trusting of government and industry. How do you think your approach is actually assisting the consumer, the end customer, to feel safe in employing these new innovative, I guess, regimes?
Yeah, thanks for the question. So I suppose in terms of the trust and in the financial institutions, we have the various regulatory frameworks in place for those entities that we regulate and those entities that license them. I think the bigger challenge comes in when financial services are being offered through a non-financial services company, right? In short, what is commonly known as embedded finance. And that's where potentially a consumer can consume financial services through unregulated entities. I think that's where the complexity and the challenges arises. And who do you trust? Do you trust the financial institutions? Do you trust the non-financial service company? What is the arrangement between these two sectors? And this is where I think we introduced the data sharing handbook sometime last year to kind of pin down certain best practices where financial institutions engage in such partnerships with non-financial services companies. And I think
framework.
Sorry, Veronica, can you turn your, yep, thank you.
Yeah, so I think that is one step in terms of providing guidance in terms of data sharing best practices. Of course, I think we are also currently working on some other initiative to see how we can level up or kind of, in a way, maintain a level of trust when customers engage financial services through non-financial services companies. Yeah.
Thanks very much, Ken. That's a fantastic point. Look, guys, just in wrapping up this panel, I've really enjoyed learning about 3 different approaches, 3 different countries. I think it's going to take another 12 months. I'd love to revisit this in 12 months when we start to see more of an uptake from a consumer and see what are the learnings and has anybody refined or made changes to their approach. But can I ask everybody to join me in thanking Mr. Novianto, Mr. Chua, and Ms. Martin, please? Thank you very much. And Camilla, I'm going to hand back to you now, as I believe the next panel will be ready to go.
Yes, and I will hand over to Nelixa. Thank you very much for that, Jamie, and to all the updates from the regulators. Thank you very much, Nelixa. Over to you.
Thank you, Camilla. Good morning, good afternoon, good evening, everybody. It's a pleasure to be with you today. I'm going to ask Hedel Poppert from HSBC and Ralph to join me on screen. I can see Hedel, but I can't quite see Ralph yet.
Hi, everyone.
Hi, Hedel. And yes, we have Ralph back with us as well. Thank you both for joining this session, talking about open banking, PSD 1, 2, and maybe PSD 3. Just by way of introduction, everybody, I'm Nelixa Flukia. I am formerly a regulator with the Financial Conduct Authority. I was also head of regulatory at the OBIE, the Open Banking Implementation Entity, and I basically lived and breathed PSD2 for the whole time it was during negotiation. I'd like to introduce Ralph Bragg. Some of you will already have been on the session where Ralph presented earlier, but Ralph was the Ecosystem Trust Framework Architect at the OBIE and is a digital identity specialist. And I'd like to introduce Hethel Poppert. Hethel is the Open Banking Director of HSBC and the Global Product Lead for all Open API development in core banking products, and the HSBC representative on the Open Banking Implementation Entity Steering Group, and that was a mouthful. Thanks both for joining today and for sharing your thoughts with us. I'm going to dive right in and ask the questions, and it'd be great if we can have a conversation. And if anybody would like to post anything in the chat, please do that as well. So the big ticket question, in your opinion, what is the current state of open banking in the UK and the EU today? And Hethel, let's start with your views on this, please.
So I think we made a really good start. We're 4 years in, and we now have around about 10% of consumers using open banking services in the UK, and about 20% of SMEs. In Europe, the picture varies dramatically. So in some markets, Scandinavian, Netherlands, Germany, we're seeing very good traction and quite similar levels of adoption. In other markets, it's been less successful. And there's still teething bugs that are being worked through between the various participants in the market. So I think we're making good progress. I think if you look for a local Asia parallel, HSBC is also live in Singapore, and we're seeing about the same growth curve. 2 years in, Singapore's hit about 2% of consumers now using the service. UK is about the same point.
Thank you, Hethel. Ralph?
Yeah, I'd echo Hethel's points. I'll go a little bit further. When they say it's quite successful in the UK, HSBC being one of the CMA9 was regulated to provide and mandated to provide those APIs. But if you actually look at wider adoption across the UK, there's still a long way to go. Most of the value propositions you see from TPPs do only include the banks that have been mandated. That does cover 90-something% of the market, but there is still a long tail of banks that aren't being served by those TPPs because they don't have the same consistent API implementation. And across Europe, as Hethel has said, it's quite a fragmented state of affairs. There's lots of different standards, there's lots of different standards bodies, and even amongst those standards bodies, there's no real force or compulsion to drive through to genuine interoperability. So you have seen the rise of a huge number of intermediaries that do take a slice of that pie every time that you try and engage with those wide or a larger number of banks. So hopefully with PSD3 we can fix some of those problems and drive towards greater interoperability.
Thank you. So it's got off to a good start, but there's a long tail and it could be better. And so that would bring me to my next question. Bearing in mind that PSD3 is several years away, this is a piece of legislation that took several years to negotiate originally with PSD1, then PSD2, and PSD3 has just started its journey. So both of you have got real practical experience within this ecosystem. So for the benefit of our audience, what do you think has worked well and what, with the benefit of hindsight, could have been improved? And Ralph, let's come to you first.
Well, in the UK, we should have started with a whole of market approach. The original trust framework design was really geared around PSD2 only. It wasn't really looking at the what was needed to drive the UK towards a trust framework for other sectors and other markets. There are some limitations within the current I suppose tech stack that underpins the UK market. The UK was lucky enough to have a strong, very strong guidance that was trying to drive through some very, very clear market outcomes. So what's worked well is eventually getting to the point of having decent conformance and certification processes for banks. What doesn't work particularly well is there's still no requirement for the same, let's call it social contract for relying parties to go through that same conformance and certification processes. A lot of the obligation is still being borne by the banks. And really, that should be more evenly, does need to be more evenly shared across, TPPs. All participants have a duty to make sure that their services aren't going to cause problems or issues for, other participants, including new entrants to the market. So I'd like to see conformance continue to improve. I'd like to see, increased coverage of testing, driving towards greater security, greater interoperability, and to see that mandated and rolled out across both sides of the open banking equation.
Well, thanks, Ralph. That's quite a long wish list there. Hedvil, please.
So I think the thing that's, with hindsight, we now know hasn't worked with open banking in the UK and Europe is the economic model. So at the moment, the framework is that third parties get to access the APIs provided by major banks for free. And the risk profile on payments particularly is skewed heavily towards the banks picking up the liability for payments instructed, with the TPP is only really accountable for one type of risk, misdirection. And when you step back and think about it, that doesn't make sense. There aren't any other value chains one can think of in industry where wholesalers are required to provide something for free to retailers, particularly if that thing costs money, which of course any technology service does. And so what that's done is it's created these incentives to do the minimum. The reason why in many markets, and from the tail, as Ralph said, in UK, the institutions haven't provided good APIs is not because they don't want to, it's because it's quite expensive to do so, and there's no financial incentive to put that in place. There's nothing except regulation telling them they should. And that regulation shouldn't be the reason you do things. You should do things for your customers. And regulation should just make sure you do it in a good way. So I think that's a big lesson for us, is we have to think about how do you create a fair value distribution so that all actors have the incentive to do things well, so that customers get a high quality outcome at the end of it. And alongside doing it well, we also need to embed customer protection. So each actor we need to understand what are the things they can control relating to information security and fraud, and how do we make sure they then have accountability for those things. Think about the card structure. You have a merchant acquirer who takes the risk on the merchant. You have a card issuer who takes the risk on the consumer. So the merchant and the consumer can interact with each other without taking risk, because there's somebody acting for each of them. We don't yet have that in the open banking payments ecosystem, and we need to work towards a similar framework. It doesn't have to be the same. There's lots of things with cards we wouldn't recreate if we starting again, but we do need to have that mindset. So for me, I think open banking has been led initially too much by a vision driven by the technology, and not enough by a vision of market outcomes and how we can create sustainable customer benefit. And I think industry now needs to step up and engage with government and regulators in a more proactive way to help them see what's needed to get you to that path. Now, if I look at some other markets around the world, we've seen in Brazil a very effective open banking implementation last year, which was much more a partnership between industry and government. So the total cost of delivery was far lower, and it seems to have got off to a good start with levels of usage already starting to show. Similarly, Singapore was a very good implementation. They had a lot of assets like digital identity to build on, which many markets don't, but that's worked very well. We're seeing similarly in Hong Kong, a very effective partnership between regulator and the 28 banks in the market to try and get something done together. I think that collaborative approach is going to lead to much better outcomes than a sort of traditional regulatory model, which is the way UK and Europe have been to date, and indeed Australia, where regulators define, here's what you need to do, the industry goes off and does it. It needs to be much more iterative and working together.
Thank you. So some really excellent points that you've both brought out, the high level policy issues that need to be addressed. And I think, Hedvil, you hit upon the big ticket question is, how is the ecosystem made commercially viable? And that should be sort of front and center of all jurisdictions who are looking at their open banking, open finance, open data frameworks. Consumer protection, obviously key. That's also, I think, going to drive consumer adoption. And Ralph, some really key points on how you have a well-functioning ecosystem, taking into account the technology. We do have this situation within the UK and Europe where we have two methods of access. So I'm just going to ask you, how do you feel that continues to work, and should it continue to work, or should we go with what is now proposed in PSD3, which is in effect not only an API first model, but a single API model? And Ralph, I'll come to you for that one first.
Yeah, it's a real interesting one. So, as a security specialist, I think to a large degree, phishing resistant credentials are just going to make that, that whole conversation moot. I mean, I'm never going to advocate for banks to be able to be required to support serializable credentials, i.e. screen scraping or the legacy method of access. And increasingly we're seeing banks, across the world that are forward leaning and desperate to control and cut out man in the middle, or just reduce their overall fraud exposure, especially as open banking payments start kicking in. They're not going to, I can't see a model where screen scraping continues to work. And I don't think you have really, unless regulators are going to regulate and tell banks you have to maintain an insecure mechanism of securing customer, authentication by continuing to use serializable credentials. I think the industry will answer this for you, because that's just the general trend of the industry, is to remove serializable credentials in favor of FIDO and other standards where biometrics can be brought into play to reduce the ability, the actual technical ability to perform screen scraping. So that's fine from an API point of view. A single API, I always think is going to be challenging. I think it's a great idea to go and, as I said in my presentation, to standardize on a common, preferably globally interoperable security and authorization framework. But local functional APIs are always going to need to be created, because not every single open banking jurisdiction or even just, let's call it OpenX program, what cares about banking. They might want to be doing insurance, might be doing finance, but even within banking, there's local market specifics, and there always is. There's no need to have a massively bloated, message filled with information that may not necessarily be, populated or even relevant if you think of some of the older standards. So no, I'm not a big believer in necessarily having one ultimate Uber API, but I do believe in simplifying and standardizing where it's appropriate.
Thank you. Hetal.
Yeah, I mean, I agree with what Ralph said. I think there's a direction of travel that screen scraping based access is slowly being demised in the market. I think there's a complexity that industry has to work through, which is, for example, there are some firms that have small runoff books in which they may not be looking to invest in new API platforms because it's legacy technology. If you insist that everything must go to API, then you may be forcing firms to close certain books or certain platforms because it's more economic than actually continuing to run them off. That's not necessarily the best thing for the customer. And so I think you do need to have a little bit of discretion around the edges where industry and regulators can agree to reasonable exceptions. But in general, as a firm, HSBC absolutely supports APIs as a better method of access, both in terms of customer experience and outcomes, but also in terms of risk mitigation and legacy screen scraping technologies. And I also agree with Ralph's point completely that there are certain parts of this technical standard that should be conformant and consistent, ideally globally. What I would love to see is when we have an exposure in a market, we're able to uplift our standard globally. We operate in many markets, as you know, so that our customers are safe in all of those markets. That seems to me to be the right way to treat security. It also creates a lower cost way of delivering, because if we have a supply chain which can support us in multiple jurisdictions, then it's more efficient than having custom builds in each market. But I do think the actual data specification and the data payload is inevitably going to vary by market, and trying to standardize it is going to create more complexity than perhaps it's worth. Perhaps a common design and localization around certain features like ACH payments would be a more practical way to go.
Thank you. So I think sort of the takeaway from both of you there is that API first is the better outcome. It has longer term benefits, but for anybody looking to implement this type of ecosystem, think about proportionality, maybe one or two exceptions where API first may not be the right outcome. And also bear in mind the consumer protection implications. I think that was really useful. Thank you very much. So we have been focusing on the UK and the EU, and obviously in these jurisdictions, we started on a trajectory that has a grounding in open banking. is very likely to move to open finance, and yet we're not really having much of a discussion around the wider ecosystem and open data. Obviously, other jurisdictions, in particular Australia, have started with their consumer data rights and have an end goal in mind. In your view, and Heather, I'll come to you first with this, how do you see the evolution in the UK and EU from open data to open finance? Sorry, from open finance to open data even. And what do you think is sort of the key consideration that's going to aim for a well-functioning ecosystem?
Yeah, I think as is so often the case in life, there's a second mover advantage. And I think Australia, certainly from this lens, has demonstrated it. A horizontal view, which says, what are the data access frameworks we wish to apply to our society, is a better way of doing things than a series of verticals within each society, but then you can't join up between them. Ultimately, we're already seeing open finance to really work in UK or Europe or other markets needs to have access to more data sets than just the financial institutions make available. If you think about an SME customer, what really matters to them is, of course, their banking data and their accounting data, and then their tax data. If you can merge those three data sets together, then you can really simplify their lives. So that requires public sector to be engaged. So you do need a horizontal framework which cuts across all of those and then starts to drive towards commonality of standards, because Ralph's point earlier was exactly right, that it would be futile to have one security profile for banking, another for accounting platforms, and another for public sector data. It'd make it very expensive to actually deploy services that help your SME businesses prioritize their day jobs and spend less time doing admin, which is what we want. So the discussion in all the markets that we're talking to is moving toward that horizontal view. It's a very big project. I think Australia's shown us a route through, which seems to be working for them. And I know other jurisdictions are looking at it very, very carefully. I think the second point to bear in mind for all of us is, because we work in finance, we think that's what matters. But if we look around us right now, what matters is actually less about finance, perhaps more about energy. And these things change. Events move societies, and that's normal. So right now, the focus on open energy seems to be a much bigger priority for many governments and consumer advocates than focus on open insurance or open asset management. That doesn't mean those other things shouldn't be done, but I think it's about prioritization.
Thank you. Ralph, your thoughts, please.
No, completely agree with Hethel. I'll go one step further. In addition to having a common security framework to make it easier to actually talk, the other part that's required across all of these layers is a common identity and authorization framework, because it's great that you talk the same language, but if you can't prove that you are actually authorized by whatever regulator is telling you that you can engage and interact in the energy market, as somebody else is telling you can engage and act in the finance market, then you've still got the same problem. You might have solved, how you make a phone call, but then proving carrying on that initial conversation to prove who you are becomes the next challenge. And that was one of the challenges or one of the design flaws that I'll hold my hand up. I didn't natively cater for when I built or designed the UK open banking directory. It wasn't designed natively to be multi-sector, multi-agnostic. There's been changes made there since. Brazil has got has a capability delivered for open banking, but when they went to open finance, they chose to deliver a second directory. So even though they have two initiatives and they're broadly interoperable, they have the same common security standards, they don't have the same authorization and identity frameworks. Now, whilst they'll still work together, it's not 100% optimized. So whenever organizers or countries are looking at accreditation, it does, to Hedel's point, requires a large degree of involvement with government. And I mean that holistically, because quite often there's different government departments that are responsible for different accreditation, different authorization, different mechanisms of, and if you can pull that together to provide a holistic authorization framework, then fantastic. But as the CDR is doing, but that is a really, really big challenge for a lot of governments. But it's a phenomenal enabler if it can be done.
Thank you. So we are nearing the end of our time. So just one final question to each of you. If looking across the globe, we've got obviously different jurisdictions at different stages of open banking, open finance, open data. If you were bringing something back to the UK and the EU to say, actually, we've had best practice, but we now need to learn from what other jurisdictions are doing, what would be your one or two asks of the regulators in the UK, the EU, or even of industry, as to this is what we need to take from X jurisdiction to make our ecosystem better for the end user, for the ecosystem participants? So Ralph, I'll come to you first on that one.
Yeah, simplification. In each market that we've worked in, we've been able to make the standards simpler and also increase security. And that's been, again, with some of the, the active contribution from the OpenID Foundation, security frameworks and profiles when it comes to creating more and more standardized rules and simpler secure standards for engaging in these different ecosystems. The UK was great, but it went first. So if you're asking what we bring back to the UK, is we now bring back 6 years worth of learnings and refinements back to the UK to say, hey, it was great, fantastic, everyone's used your base and that was your greatest contribution to the world. Now it's time for you guys to now, learn from what the rest of the world has learned from you, and to then, do V2. The problem with that is that these migration programs or an uplift program can be quite expensive. It's just, these are foundational standards, they're foundational processes, and when they go in, they tend to be, pretty hard, pretty hard to coordinate and shift. I would always say to any new market that's going on is to look at all the markets that's gone before and try and look at the last one that's gone before and look at what incremental benefits that they took from the one that's gone before. There is always elements to improve. Some markets are quite willing to quickly improve and continue to iterate. Brazil in particular seems to have no problem with making very quick decisions and then compelling the entire market to jump and implement those decisions, which is great from a technologist point of view to see this iteration take place, but it's expensive to continue that sort of pace. But yet learn from what's gone on before, and then recognize that the UK also needs to invest to remain current.
Thank you, Ralph. Hedal?
Yeah, I think that's right. First movers need to look at who came next, because they tend to iterate and improve. That's what humans do. We learn from each other and to try and improve what we do. I think the single market that I've been most impressed by that's come after Europe has been Singapore. And the thing that made Singapore special, Singapore's always special. It's a wonderful place. But one of the things that made it particularly special is they had a digital identity framework already in place through GovTech, and that enabled new data sets, with open banking, open health, open tax data, to be added together with a single place where consumers can go, which means the commercial benefit and the consumer benefit grows incrementally. It grows exponentially, because you get a network effect around those points. It also made the cost of implementation far less onerous on industry, which encouraged firms to get on board and do it well right up front. So if markets were starting fresh, or if you're going through a round of upgrade, I would say look at whether there's an opportunity to embed digital identity now, because that'll make the entire journey going forwards much easier.
Thank you. I mean, that echoes what some of our previous presenters have actually said about having a digital ecosystem, digital identity. It's obviously something that we still struggle with in the EU and the UK, and I'm not sure that we're going to solve for that whilst we're talking about PSD3. But thank you both for your time this morning and for sharing your thoughts and your expertise. And I would now like to take this opportunity to pass over to Daniel Wu, who is Head of Financial Services at Amazon Web Services. Welcome, Daniel. Thank you.
Thank you very much. For this next session, let me continue. I thought that was a disruption. Thank you very much. For this next session, the session will be titled Plan for Forever While Building Now. What does the perfect ecosystem look like? As introduced earlier, my name is Daniel Wu. I'm from Amazon Web Services, and I'm based in Bangkok. And thank you for the opportunity to be here today as your moderator. To kick off this session and establish some context for our audiences today, I'd like to specifically speak about the term building in the title of this session. One area to do so is I'd like to borrow from my organization, Amazon. In this particular case, I'd like to talk about our distinctive pride in failure. We take particular care to be one of the best places in the world to fail. It's interesting, right? But that's only because failure and building are inseparable twins. When we build, or to invent or build, you have to experiment. And if you know in advance that it's not good, it's going to work, it's not really an experiment. You're not truly building. So there's a healthy premium here to be stubborn on the vision, but flexible on the details in the long-term thinking. And consequently, because of that long-range thinking, you have to be willing to be misunderstood for a long time. So with that context in mind, it's my extreme pleasure to introduce our senior cast of speakers here today who have embraced this builder's mindset as they were searching for that ending, strategizing logistics and mobilizing the community, and then building for that eventual long-range ending that we're looking for. So it's my really great pleasure to introduce Mr. Brad Carr, who's an executive in digital data and analytics governance and industry engagement at NAB. I also pleased to introduce Mr. Ivan Mortimer Schutz, who's a payment specialist at the World Bank. And lastly, Mr. Yinfan Zhang, who is Director for International Public Policy and Government Affairs with Ant Group. Just like the previous session, we're going to have 5-minute podium lectures from each of our speakers first, and then we'll transition into a Q&A, during which I'd be very happy to take any questions that the audience might have for our speakers today and facilitate the discussion. So to kick us off today, very glad to introduce Brad as our first speaker, who's going to give us a banking perspective on this particular subject. Brad, over to you. Looking forward to hearing from you.
Daniel, thank you. Great to see you again. Great to reconnect in this forum after the separate AWS IIF work that we did together previously. I hope I can be a bit more engaging than a podium lecture, but thanks for setting the scene. And thanks to Camilla at the EPA and JC at DIWA and APEC for convening this important session. Daniel, I do like the point you made about experimentation and the culture of that and the value of that. But at the risk of being a little bit provocative, I'm going to start by arguing with the premise of the session's question. What does the perfect ecosystem look like? I don't know. And I don't think anyone knows. And I actually don't think we need to know. Rather, we need to let the perfect ecosystem happen. It's not so much about trying to design that perfect ecosystem, but rather about creating the conditions that will enable that to emerge. And I think if we can provide safe methods for consumers and businesses to select who they want to share their data with, and if we can provide secure vehicles for that transfer, as we were hearing in the last session about secure APIs, then I think innovative players will emerge and they'll find new opportunities and new use cases beyond anything that we can probably imagine today, and probably, well, certainly beyond anything that we could try to design or construct now. And I think one of the great failings that we have today, and I say we in this sense as collectively across all of the private and public sectors, is that I think we're often still trapped in this mindset of traditional sectoral boundaries. And I think that even some of the more progressive open data regimes across the world are impacted by that constraint. Now, in calling that a failing, I want to stress that I completely empathise with the course of how we've landed there. It's understandable given the legacy regulatory constructs, the realities of legislated mandates that agencies have. For us as a firm, the legacy that we have as a bank in coming from a particular sector. But that legacy thinking is not where our customers or a country's citizenry are coming from in their expectations today and in the future. And even in Australia here, where we have our consumer data right that I think is rightly lauded for trying to go beyond just open banking and soon into energy retailing and then telcos and insurance, we're still kind of approaching this as a sequence of sectors. Whereas to the consumer, it's not their financial data and then their communications data and then their social media data. It's all their data. And so this, I say this with some humility because I'm kind of revisiting some of my earlier thinking here. I'd previously seen the sector by sector progression and thought it was all very directionally positive. And I completely understand why we in banking were really right to be the guinea pigs that would go first. But I'm coming to see that I think there's a greater urgency now in getting beyond that history, given where consumers are now at. The reality we have now across our economies and across patterns of consumer behaviour is that traditional sectoral boundaries just really don't matter anymore. And I think this has been accelerated through the pandemic, the adoption of e-commerce, the use of new telecommunications like this, the shift in entertainment preferences towards streaming, online education, increased reliance on integrated big tech platforms. And these have compounded a lot of the trends that were already happening, the gig economy, the growth of gaming and metaverse, the centrality of social media and how we interact. Incidentally, just to do a bit of cross-promotion, we've got a new podcast out today with DeepView's CEO and founder, Catherine Parry. She talks about the serotonin boost that people get from social media and the security vulnerabilities that opens up. My point is that none of these things are happening in isolation. We're in a very interconnected world, integrated world across the different walks of life and the different parts of a small business's activities, and a world in which we really have embedded finance and banking as a service. And so for us as a bank, and I think probably reflective across the industry writ large, we don't operate in a vacuum. Our customers want integrated service delivery, and we and others like us and others that might be different to us but competing against us, we all know that we need to bring that integrated delivery to our customers. It's the reality of what they've come to expect from their heightened experiences. So I think open banking is a bit of a redundant way of thinking. And I think the same is true for open electricity or open any other sector. And we really need to get beyond that incrementalism if we're really going to achieve those economic and consumer outcomes that open data makes possible. I think framing it in terms of sectors, maybe we need to instead frame it in terms of the data sets that might have value for others elsewhere that can innovate elsewhere in the economy. I love the example that was published in the US by the FDIC on research from Manju Puri at Duke University, where they modelled creditworthiness using all the sort of traditional credit bureau metrics that we use at a bank: income, repayment history, the asset base, etc. And then they modelled it on the same customers on their digital footprint. What kind of operating system you use, what time of day you logged in, whether you typed all in capitals, whether you used your work email address or your Gmail. Well, they found that digital footprint was actually a little bit more accurate. But where you got a real quantum leap uplift was when you could put those things together, both the traditional credit bureau metrics and these others. So I think we need the consumer having the ability to take their data wherever they wish, whether that's those sort of metrics I mentioned, whether it's their social media networks, their browsing history. It should be the consumer's choice and for them to decide who they want to trust and who they want to share that with. So,
Brad,
conscious.
I'm sorry to cut you off.
Okay.
Yeah, I'm sorry, Mr. Brad. I'm so sorry. Let's pick up on this. I think in the Q&A, I think you expanded on the point about sector by sector incrementalism doesn't work, and I think we're going to pick up right back on that in the Q&A section. Let's transition just a little bit, building on what Brad had shared earlier, and I'd like to invite Ivan, who now is going to talk to us a little bit from a cross-sector perspective. Ivan, floor is yours.
Thank you very much. Can you hear me all right? Yes?
Yes.
I'm on two devices. Yeah. Okay. So maybe I'll just try and highlight a few points, because this is indeed a really vast space that I think policymakers are finding increasingly complex, and in which really we need to see, I think, open banking and open finance initiatives today as just one, as many speakers mentioned, very early stage, but quite well structured approach to the broader issue of how we mobilize data and adjust to the new economic circumstances that we're all really encountering, where not just consumers, but also businesses and government need to be able to do more with data in an interoperable, secure, and productive manner. And so we're really on a dynamic journey, which is going to have several stages of evolution, where perhaps data that is now important for us will gradually, like in many economic processes, diminish in terms of its marginal contribution to productivity. But then as that happens, other data sets will become more scarce, more meaningful as we increase productivity and new business models. So maybe just highlighting a couple of issues, along the theme that you brought out. So indeed, first of all, we are crossing more and more sectors, and I'll give you a few examples. I think from a policy perspective, it's important to highlight that we're crossing these traditional boundaries of different regulatory and government authorities, as well as industry authorities, if you like. And of course, crucially, this is becoming very, very quickly an international market. And that raises a couple of implications, which I hope I can kind of quickly point to before my 5 minutes are up. So in terms of broader sectors, I think, as was earlier mentioned, we look at this a lot through the financial sector because the financial sector actually permeates every element of economic activity. But we're seeing that the issues that we're raising are not just of importance for consumers, they're important for businesses. I think in a lot of the emerging markets that we deal with, it's a really big issue for the gray zone of informal businesses that have perhaps an identity, but they don't have an identity which enables them to encompass their private lives and their corporate lives. And I agree that that's a linchpin or sort of foundation stone that many markets need to deal with. We see data in the area of things like logistics, healthcare, accounting systems, of course, sales mechanisms. All of these areas of the economy are looking at how they mobilize data, primary data that belongs clearly to somebody, secondary metadata, analytics that sit on top of that. All of that data is looking at how it can be mobilized. And crucially across these sectors, the key issue, as we see also in the UK history, is there a market failure or is there a constriction on the market access or ability to use and share data? Or is that already a market which is quite well structured and open? And I think that the answer to that question often changes by sector and by country. Secondly, I think that the big challenge that we're all going to have to confront is indeed how authorities in different sectors work together. Because as Brad pointed out, the real economy does not really respect these historical boundaries that we've been used to. The banking sector or the financial sector is typically one in which those boundaries have been very, very clearly defined, and the powers have been in particular very strong, but other sectors have those same, increasingly have regulators or authorities that cover their issues, and everybody is dealing with how to coordinate. The third issue is, of course, international. This is going to become and has become a very broad international domain where different countries need to work together. And I think the crucial issue we're encountering already is governance. If we are going to rely on and promote open standards and industry collaboration to look at this not just through a domestic lens, but internationally, how do we engage or develop a governance structure that gives different countries of different historical weighting and economic importance the right buy-in to standards that may eventually have a very significant impact on authorities' ability to govern the market, to police the market, to gain access to the market. And all of these sorts of issues are raising...
I'm so sorry.
Okay.
The 5-minute bell has also rung for you.
Right.
Ivan, thank you. I like that you spoke about the different strata of industries and countries, and we're going to come back to that, I think, in the Q&A. So let's save the best for last. So now let me turn the floor over to Yin Fan, who's going to give us a platform perspective. Yin Fan, over to you. Thank you.
Thank you, Daniel. Can you hear me?
Yes.
Yeah, I think Brad and Ivan already touched my points, but I would like to maybe restate from a platform perspective, because I do agree, the openness and there's no perfect ecosystem at all, the points they have been made. And I want to raise and ask you to focus on two next. One is the openness and one is the connectivity. I think when we talk about open data, especially, concerning the policy environment, we tend to describe a policy environment as being either lack of clarity or, on the other hand, too many restrictions with limited openness. But I think there's, as Brad mentioned, there's no perfect system. So I think both extreme actually reflect the unique nature of data and the digital economy, which is built upon the usage of data. And let's compare data, their nature, to conventional assets or raw materials. I think it is difficult to define the nature of data as raw materials in different user cases. And the nature of data asks us to do things constantly differently. I think policy possibilities change as the technology develops. And sometimes private sector business could get this well ahead policymakers. However, on the other hand, the lack of regulation will not support an open and fair playground for competition, while too much interference from policymakers will limit the innovation and creativity from the market. But things could be easier if we examine the entire balance or dynamic from not a snapshot point of view, but a developing evolving perspective. So policymaker could design the framework with openness and allow the space for, flexibility and space for modification by very close and open interaction with business and tech drivers like us, like exactly what we are doing now, while business will forge a close interaction with policymakers, where they could also follow the trends and the social policy trends from a more macro perspective, while it's trying their best to innovate. Because the harder we innovate, the better products and services we will be able to provide to our clients and the society as a whole. So I want to state that the entire process should not be one-off. It should be on an evolving process, and there's only the beginning and there's no end to this interaction of the continuous interaction. And this interaction, I think, form the foundation of an enabling ecosystem, which is the topic we are discussing today. And the other point is about connectivity. I think that brings back to Ivan's point on the boundary between different, sectors. And I think openness is one hand, but the connectivity between these sectors is also a key part, especially for a platform perspective. Because again, back to the fundamental nature of data, we can understand the way how the society is organized and how the industry are organized, because it is designed based on the category of different raw materials, final product or services, but they are conventional materials. While data and technology advance sometimes break the boundary and requires more cross-sectoral usage of data, which enables tech innovation. Let's take an example from Ant Group. And a data collected based on consumer behavior could be easily converted into a carbon emission report and therefore be used as an underlying source for green credit evaluation. While Earth scanning by satellite on agriculture fields, the Fidelity Nutritious, could also help predict the agriculture harvest and help design catastrophic insurance schemes. However, by far, these data are regulated by different governmental bodies, whether Industrial and Trade Promotion Bureau, financial regulators, agriculture, or environmental ministries. There are not natural boundaries in tech for these data, but actually artificial borders made by men ourselves. So it would be ideal if there will be an overarching collaboration between different social departments, governmental departments, business departments, and we prioritize these collaboration under the flag of tech innovation, which will direct to the entire well-being of our society. And such a vision.
I'm gonna
sorry.
Ring the bell and cut you off. 5 minutes. Yes. Thank you so much for sharing that. I like the part where you said collaboration and the fact that this is a journey rather than articulating a destination. And I'm going to come back to that. I just love to pick your brains in your perspective as a public policy leader. So thank you very much, Brad, Ivan, Yin Fan, for giving us a perspective from your point of view in your world on this particular topic and setting the context for the remainder Q&A. Again, I'd like to invite the audience to please post your questions in the chat, and then I will tee them up to the speakers. So for the Q&A, we do have some questions that have already been discussed, and let's do in reverse order. Was it reverse order? Yes. So Brad, that would be you first. Brad, the part where you mentioned about the sector by sector sequence doesn't make sense. To me, it kind of runs into Ivan's point that the fact that FSI, financial services, cuts across literally every industry. So the role of the banks remains crucial, no matter where we go, at least from now until the short to medium term. So as banks play a linchpin in the evolutionary arc to enable open banking, then open data set ecosystems, can you help us understand from your point of view, and then kind of marry that with what Ivan said, how would the role of the banks themselves evolve in this journey? Is it a bit more of the same, or is it something entirely new and yet to unfold?
Well, look, that's a great open-ended question you've just thrown me there, Daniel. I think the role of the banks, can be, and this depends on the firm's own strategy and its own capabilities, but banks can emerge as perhaps data hubs or trusted verifiers of data. And certainly this is somewhere where we see our banks here in Australia, but also ahead of us in Canada and in the Scandinavian countries have seen the opportunities with digital identity. There's a lot of data points you can look to, and I think they were alluded to in our prior session, that there was the Bank of England's Future of Finance report in 2019 that I think when asked who they most trust with their personal data, 84% of people said their banks. The other 16 scattered across a range of other sectoral residents. There was the BIS report just over a year ago that called out quite consistently across all sorts of demographics that people trusted their bank more than they trusted their government, more than they trusted their tech firm with their private data. So I think there are opportunities for banks to leverage that trust. Now, of course, trust is only great so long as you have it and so long as you live up to it. And it's absolutely critically important, and it's a real focus for us to ensure that we have frameworks in place that we continue to be ethical and transparent and secure in the way that we use and transfer customer data. So I think that's absolutely crucial to anything that we might leverage. If I can add one more point, Daniel, and I think, I've talked there a bit about the cross-sectoral viewpoint, but I think also we need to not constrain our thinking with existing use cases. And it's something that we do a bit of internally within a bank, and we look at what new investments we might make using some of these data sources, and we talk a bit about what's the use case. But we also see it when some of our engagements with government, and government wants to see what the use case would be before perhaps extending some of the reach of open data into other sectors. The reality is that a lot of the use cases that are going to be really relevant in 5 or 10 years' time are things that we just don't know now. It takes me back a bit to the old Henry Ford adage about, if I went and asked customers what they wanted, they would have told me they wanted a faster horse. I think we need to just have that, be cognizant that if we just limit ourselves to thinking of the use cases of what we do today, then we're only ever going to be a little bit better or more efficient at doing what we already do. Whereas there are a lot of other opportunities out there that we might be able to do them. It might be other more innovative and nimble players than a bank. It might be things that we can do in partnership with some of those more nimble players. But, I think we need to leave that opportunity open, that we are able to pursue some of these things that we can't imagine at the moment. And I think that's the only way that you're really going to enable customer empowerment and productivity growth.
Brad, that's a really great point. And in fact, it's a great segue to a question from the audience, which I think I'll direct to you. And I think Yin Fan, you might be interested to answer this too. The question goes, what is the investment model and commercialization model in place as there are many stakeholders from various sectors? Would you like to give that a stab? Oh, Ivan, please weigh in too.
Yeah, did you want me to start?
Yeah, Brad, would you like to go first? Yeah.
Look, I don't know that there's a singular investment model or commercialization model. I think there's probably several, and again, to the point, I don't want to be constraining or focused on an individual one. I guess one observation I'd make, and I'm probably drawing more on my IIF history here. Banks have customers. Banks have significant customer bases, have significant customer franchises. That's one of our core strengths. We are not always terribly nimble and agile firms for a variety of reasons, both in terms of legacy, in terms of our risk consciousness and our governance controls that people like me oversee, etc., and get in the way and interfere. On the other hand, a lot of the more nimble firms have all of the great ideas, the great technology. They don't have the starting point of having a significant customer base with which to work. So I find that is often a fairly natural opportunity for collaboration where those interests align, but most importantly, where we can each make our interests align with the customer's interests. Because ultimately, if you want to have a sustainable business, that's what you got to do.
Thank you, Brad. Lovely. So let's move on to the next question then. Ivan, coming back to you. So before we had to ring the bell on the 5 minutes, you were just touching on that important point of different countries, different sectors, not quite the same in terms of priorities, and therefore there is some kind of strata there. So talk to us more about that. And then if you think about what are some early groundwork that we can start laying today to perhaps reduce some of those barriers that we have created, like Yin Fan was saying, like that we impose as man on ourselves? And then how do we overcome some of that? Over to you. Thank you.
Yeah, thanks. So I think the point I think that we need to look at is that this is not about one ecosystem, but it's a multiplicity of different ecosystems with different actors and data. And therefore, we should be expecting to see different, I would call them architectural models emerge. In fact, we already have a multiplicity of architecture models when we think about who are the data subjects, who are the companies or institutions that are creating the data, how does the data get modified, how do we regulate or not access and usage. And we have some very familiar models. We have hub and spoke models. We have bilateral arrangements. So, some of these pictures came up earlier on in Ralph's presentation. And we have increasingly federated models, which open banking is arguably one example of, where we're extending access, but to data that there. And then we have a sort of an emerging area of much more distributed models, which are also being experimented with, among others, in Singapore. And I think we're also going to see the emergence of models whereby data subjects themselves own and actually have operational control over their data, just almost in the way that, if I get a paper statement of my bank account, I can take that piece of paper wherever the physical world allows me to go. But if I can do the same thing with my digital data, then we end up putting a lot more control and direction in the hands of the consumers. And I think that's what's going to drive, it's that diversity of architecture coupled with the different problems we're trying to solve for. In other words, how do I get more access to credit bureau data? May need a very different answer than what do I do to better manage healthcare data, or to the point about the ecological footprint. So each of these different data sets and circumstances may require a different governance structure because the risks and the access rights are different. The architectural approach may be different because we're starting from a different point in terms of who owns the data and who wants access. And that's what I meant when I said that the open banking approach we see at the moment within the finance sector is we're one species within a growing, quite diverse, ecosystem in which we should expect to see a multiplicity.
Thank you very much, Ivan. That's super helpful. And just deep dive a little bit to wrap things up. Do you see these different architectures meeting together, melding together in the future, or is it too early to tell? What do you think?
I think de facto they already do melt together, but in the sense that they're going to be forced to, and they already are forced to support economies that are de facto integrated. The question is, in each of these different areas of the economy, what frictions are we creating? Every time we create a standard, it helps to create interoperability. It helps to broaden the ecosystem, create larger economies of scale. But de facto, as Ralph was pointing out, it does cost time and money and energy to take what you have today and move over to a new or different standard. So we need to be cognizant of what are these additional frictions we're creating, and are we managing them in a way which overall is leading to a better outcome, or are we inadvertently, as you might say, balkanizing sectors and countries around new lines? And I think that's what everybody's conscious of, for example, in Southeast Asia at the moment, is that, well, we don't want to inadvertently create different standards or regulatory frameworks that actually make it more difficult than it is today for these kinds of new and innovative services to scale across the region, for example.
Thank you very much, Ivan. Thank you very much for clarifying on that point. That's really good, really great stuff. In the remaining time, I'd like to ask Yin Fan to take the final question and bring us home to wrap up this conversation. So actually building on the session one, prior to ours, we heard about the importance of the policy environment. And likewise, we heard from Brad and Ivan about the role of policy architectures affecting how the industry itself will have to agilely innovate and figure out a path forward. So in your day job as Director for Public Policy at Ant Group, love to get your feedback and views on this particular question. So we already heard that we have to thrive within a successful and enabling policy environment. From your point of view, what does that look like? What are some of the blockers in place today? And then what advice do you have in terms of how we can engage regulators to shape that foundation?
Thanks, Daniel. I'll be quick. I think we are the fact that we are having this conversation now with the group of EPAA and many of the other workshops we are doing with the regulator is already a sign of actually there is an enabling policy environment at the moment. And at least in Asia Pacific, I think most of our governments, our regulators, they're very keen to engage with business. And for Ant, we have been speaking to many of them and exploring what they're going to do and how we could participate individually or with different members or via industry bodies. So I think the dialogue is already happening. And in terms of what will be a good or of what will be an enabling environment, I already mentioned in my sharing, which is an environment of openness and also an environment of connectivity. And if we have these standards or these targets, I think tech will evolve by itself, and tech will bring and convert into the industrial and regulatory transformation, and that help in competition. And if that's in a open market, it's in a competitive market, I think tech itself will speak, and tech itself will drive the industry to go. As long as we are going towards the well-being for the for human being, for the society, I think that's what we should bear in mind, and that's the policymaker and statesmen should think about. But for us as a platform, we are very keen to engage with government and with the policymakers to make that dialogue happen and make sure the channel is smooth.
Yin Fan, thank you very much. I love that you basically brought us to this close, focusing on let's stay grounded on shared values. And I think that's really the theme that has been permeating throughout the conversation today. So we now come to the end of this session. I'd just like to ask our audience to please join me in thanking Brad, Ivan, and Yin Fan for very generously sharing their perspectives on the topic today, which is about planning forever while building now, what the perfect ecosystem could look like. So thank you very much, gentlemen. For the next session 3, I would now turn it over to Saurabh Shukla, who's Director for Technology with KPMG Australia. Thank you very much, and for the opportunity to be your moderator today. Thank you.
Thanks a lot, Daniel. And hello, everyone. I'm Saurabh. I work at KPMG, and part of my role, I support our clients with CDR, from strategy to compliance. I've helped banks, telcos, energy organizations, technology organizations, building products for CDR. For this session, we have got Simone and we have got Lawrence. Simone is the CEO and co-founder of PayPal. She's also the chairperson of FinTech Australia. She sits on multiple advisory boards, and her company PayPal focuses on the payment initiation network. Lawrence White is a qualified lawyer, a senior advisor to Institute of International Finance, and in that role, he supports IIF on digital financing, digital assets, cross-border payments, digital trust and cloud. So we've got wealth of experience between Simone and Lawrence. And the topic we're going to talk about is around the ecosystem. What's worth protecting and what's worth regulating, and how do we drive value out of the ecosystem? The topics we expect to cover will be from multiple perspectives, from regulators, consumers, the role of banks, principle of reciprocity. So please join me in welcoming both Simone and Lawrence to the session. And if I may open up with, Simone, you first, in terms of creating an ecosystem, sharing and protecting. What excites you, and what are some of the concerns you may have? And then Lawrence, you can follow.
Thanks, Saurabh, and thank you, everyone. I'm a little bit humbled to be in the presence of so many great minds in this space. But ecosystem is a really exciting thing to talk about because it's really the result that we all want to see out of all the different open banking initiatives around the world. I'm based in Australia, and we're really at the beginning or the embryonic phase of that ecosystem creation, where it all feels a little bit awkward. It feels like we're forcing a relationship at the moment, and that's due to a number of things that I'm sure we'll be able to talk more about. Why is it exciting? It's exciting because I think that we are at a point in time where we're really seeing the foundations of how we interact as future consumers, future companies, and future banks, I suppose, and data holder entities. That's being created now. That's an exciting thing. It's not often that you get to participate in that period of history. That's like going back to that original Diners Club card that was handed across. That was the start of that network. So I think it's exciting, but obviously there are challenges that we need to recognise, and it's a positive sign that we've got so many amazing minds thinking about the various challenges.
Lawrence?
I mean, in terms of how to create an ecosystem for consumers, sharing, protecting, I think one of the points made earlier by one of our members, it was quite key, is that we need to get the economic incentives right. Now, obviously, consumers will participate in these open data ecosystems if they understand that the added value services they can access by sharing their data are easy to use, compelling, and trustworthy. For example, the principle of user centricity requires that the user should have control over the sharing of data through tools such as consent dashboards and a good and simple user experience. Financial institutions, utilities, and others sharing consumer data with accredited data providers need to have confidence that that data will be well looked after and subject to secure and legally enforceable privacy requirements. So I think one of the enablers here is clarifying the privacy regime as well as the standards applicable to those standards. And another detail that we've done quite a bit of work on at the IF in the context of digital trust networks, where we have worked with the OpenID Foundation, is around the liability model for shared customer data and the necessity to get the liability model absolutely right.
Thank you for that, Lawrence and Simon. And you mentioned the customer centricity aspect, right? And we have heard a fair bit today from the regulators who are defining the policies and the standards, and we've heard from the banking fraternity around things they are doing to around CDR. One of my primary questions and the heart of it is around the ecosystem is around the consumer themselves. In your experience, what do you think are the challenges in driving adoption, acknowledging there have been, we've seen the J-curve. The adoption hasn't been great early on in the regime, and it has taken a fair bit of time for various markets to pick up. So what do you think needs to be done, and what role would you see banks and the regulators playing in increasing that adoption rate?
I'm happy to jump into that one first. I think to Lawrence's point, having the right economics involved in the ecosystem is one of the most foundational things to drive further services and products and create better experiences for consumers. In Australia, we've obviously gone with the regulation and mandating banks be prepared to support open banking as the first stage of our CDR, and that's what we're now moving across to utilities, power providers, and so forth. I think that that's had an interesting effect. Whilst it's obviously where we decided to drop the pin to start creating that that network effect, it has meant, I think, that some banks have really thought about participating in the ecosystem from a compliance perspective, and that doesn't necessarily drive good product outcomes. It creates a minimum viable product type mentality without really thinking through how it could actually be a tool to bring them closer to their customers. Thinking about a network as an ecosystem, which really you can apply to open data, economic models like interchange, and I know that's the second reference to cards. I promise I don't normally talk about cards too much. That's something that hasn't really been brought into open data. We've seen I think in the UK, thinking about things like premium APIs for various data sets. And obviously in the US, where there was a market-driven approach that had economics at the backbone. So economies like Australia, where we haven't thought really, how do we incentivize people to participate? I think that's definitely something that we need to really get to. There's obviously other things in there, like how do we ensure that the consistency of experience? We've developed a payment initiation network completely separate to CDR. That's obviously got more commercial implications, but how do we then bring that back in so we don't have a fragmented experience going forward for consumers and create a confusing chain of consent? Yeah, that's probably, I'll leave that there and let Lawrence pick that up.
I mean, look, I think some of the other dimensions here are what is the data set that's required to be shared as a regulatory issue, and then what added value services and what additional data sets can data custodians like FIs, like utilities, share as a, with some kind of revenue model attached to that. And so the rules need to be very, very clear if it is a regulatory system to avoid that sort of confusion effect where, the lack of clarity in the regulations may drive an investment strike where otherwise FIs would be happy to invest, and of course it's in FIs' economic interest to invest in data enrichment, in data analytics, but if there's a fear of a free rider effect arising from a lack of clarity in the rules, then there may be a shying away from investment in those very necessary and desirable things. Now, of course, the economics will be gradually transformed as Brad Carr's mentioned earlier, more and more sort of sectors or more and more types of data sets get scoped in to these regimes, then there may well develop an exponential payoff. And so a little bit hard to predict, and I think Brad and others are right to say, let's get the settings correct and let the model develop organically. But I think the settings do require clarity around liability, a horizontal approach to privacy that's not sector specific as far as possible, non-duplicative privacy rules so that there isn't sort of confusion as to whether the general privacy regime applies or a special purpose open data privacy applies. Get the settings right and allow the system to settle around a new equilibrium.
That's great. Thanks, Lawrence and Simone. And you mentioned the future ecosystem. You mentioned the utility model. You mentioned kind of additional sectors coming, becoming part of open data regime. As kind of new sectors come in, what kind of use cases would you see emerging to drive the adoption in the ecosystem? And also keen to get your thoughts on how do you see the evolution of bank? Would they be, focused on banking services, or would you see there are use cases which may blur the boundaries around bank and a utility provider?
Yeah, that's a good question, Sarah. And I think that it's possible to see a future where your bank is your utility provider. They may apply in Australian terminology to become a data recipient as well as a data holder. And they may have a use case of accessing your utility data so that they can incentivize you to take a home loan with them by paying your utility bill. All of a sudden, they become your utility provider. And that's a really interesting shift of who's who as far as understanding which provider we're using for which service. And you can see how utility providers would be a little bit threatened by that model. It's probably easier to do that than it is to turn around and provide banking services as a utility provider. So I think that once we do see more and more sectors opening up and becoming part of the mandatory data requirements, there will be some really interesting use cases that do blur those roles. Will that be positive for consumers? Well, I certainly hope so, because that is the ultimate outcome. But I think it will be an interesting time once those use cases become available. And of course, we're talking about very crystal ball gazing here, given that we are still at the beginning. We don't really have even right access written into our CDR in Australia yet. So it remains to be seen, I think, but it's there to play for, certainly.
Lawrence?
I mean, very hard to look 5 to 7 years ahead, but I guess some of the possibilities might be around banks being reliant parties for some of the social graph data and novel forms of data that may be quite powerful in terms of credit analytics and pricing of products. So, I mean, I personally would be interested in a bank offering me a LinkedIn co-branded credit card, for instance, where in exchange for me sharing my LinkedIn credentials with the bank via a secure technology, I may get a keener price on the credit card because I'm seen as a better credit risk. Now, of course, that has a flip side for those whose social graph is maybe more marginal, and it may also incentivize fraud and fake social identities. So, of course, there are risks around all of that. Another couple of directions I think are very promising are government data, and that's been mentioned today. Governments obviously sit, as it were, on an enormous pile of data. A lot of it is very inaccessible, even between government departments, let alone to the public or to SMEs and to banks. And the tax example earlier demonstrates, or is a great example of the kind of richness of data held in government, which at the end of the day does belong to the citizen, or should be seen as citizen data. And so why shouldn't I, as a citizen, be entitled to tell the tax office to share my tax record in real time with my bank or credit institution? And lastly, I guess health data. I mean, the Australian regime seems to have scoped out health data, presumably because the politics are seen as a bit difficult because health is such a privacy-sensitive area. But all of these things can be managed with appropriate APIs and appropriate controls. And so why should health be seen as a sort of special case? And unlocking health data, you can imagine the kind of e-health apps and insurance, new types of insurance products, cheaper insurance for more healthy behaviours, etc., that should be able to emerge once health data is unlocked.
That's great. Thanks, Simon and Lawrence. Moving on and thinking about taking this thinking further in terms of cross-sector open data ecosystem. One of the, in the early times and perhaps even now, when we talk to clients, the question around reciprocity comes up. And reciprocity in some ways, enables or allows for a level playing field, but in a very different way, discourages participation. A fair number of clients we've spoken with, I say, hey, if I participate early, would I have to share my data? And am I ready to do it in a meaningful way, right? In a way that it is real time, it is accurate, and I have the right data set to be able to contribute to the ecosystem. Can I get your thoughts around reciprocity, and how do you see that playing in a world where open data is not tied to one sector, right? So reciprocity may not be done in a way that it's equitable, right? How would you compare energy data against banking data? So can I get your thoughts around how do you see it playing out? It's a difficult thing to get right for the future ecosystem.
Yes, it is. It's very difficult, and I know that the Treasury here in Australia has has come up against this issue a few times and haven't really, as far as I know anyway, they haven't to date made a really clear statement on how reciprocity will sit for our future ecosystem. In some ways, you could argue that reciprocity is actually a driver of an ecosystem. What better way to encourage use cases and circulate data than to have a reciprocal relationship in place? I think one of the things that is quite interesting in the Australian framework is to apply to become a participant in CDR as a data recipient. You need to state your use case and you need to be quite specific about that. And that is what you are able to use data for. I think that if you start thinking about reciprocity, you also have to start thinking about what's fair from a competitive perspective. If you state your use case explicitly, are you giving away some of your strategy? Can you get insights onto the strategy of others because they're declaring what they're going to do? And therefore, if you do need to share data with them, does that make it harder for you to want to collect and retain that data? So it's a really curly problem. I don't have the answer to it, but I think it's going to become more and more relevant as the ecosystem grows, which is what we're talking about in this segment. And I also think it's really relevant when you think about international large tech companies coming to countries to participate in a localized open data scheme. How does that affect the competition in the local sector, and how should reciprocity factor into those decisions?
I mean, we do see reciprocity is important and have done so for some time in our writings on open banking and open data. I mean, a couple of points there are, moving away from defining banking data or energy data by reference to the sector, and but moving towards defining it by reference to its usefulness for that particular activity. So data that could be useful for banking obviously goes beyond data that's held by banks, right? Now, that goes a little bit too broadly if you then scope in all sorts of value-added data, which is proprietary, and which is the product of hard work and sweat. Now, of course, FIs will tell you, even taking on board and keeping clean and secure raw customer data is an expensive exercise, and to that extent, open data models that require the sharing without any recompense, may not be sustainable in the long run. But around value-added data, it needs to be both the client permission and the permission of the custodian or person who has invested in deriving that data that's required, I would have thought. And so, that puts a natural limit around the reciprocity obligation if it's just confined to more or less raw data. And drawing that distinction in practice would be obviously quite difficult. But I would like to echo again Brad Carr's point earlier that we do need to move away from a sectoral approach. I mean, privacy laws in the US obviously are sector by sector. Banking sector has its own privacy act, HIPAA, the health insurance privacy, and so on. And then the states have their own. We don't want a patchwork of rules, sectoral patchwork of rules around sharing of customer data, because at the end of the day, as our colleague from the World Bank has pointed out, this is a global issue. And so to have sectoral rules and a patchwork of sectoral and national rules, and even if you have global standards on some issues like digital ID, is not conducive to a fully interoperable, open, and yet well-controlled and well-permissioned marketplace.
That's great. Thanks a lot, Lawrence. And as we talk a bit more about cross-sector, CDR or open data, from a regulation perspective, doesn't operate in isolation, right? So we spoke about privacy laws, we spoke about competition laws. In Australia, we have NPP, which is pushing for real-time payments. In other markets, and we think about energy, we talk about critical infrastructure at a national level. Now, specific to payments, and Simone, probably closer to the work you do, there is an intersection between payments initiating out of one regime and CDR, and we heard from Treasury in the first session. The first priority for them as part of action initiation is payment initiation. How do you see some of these regulatory forces converging, and what are the implications for organizations and consumers?
Yes, so I think that the way that our payment initiation developed in Australia was really relevant to get to market quickly with that. Had we decided to wait and say, oh, we won't bring about a payment initiation infrastructure over the top of our real-time payment network until CDR is ready to support that, we would be a couple of years out still. Instead, Pay2 switched on officially on the 1st of July. And it switched on outside of the scope of CDR, which means that companies who wish to participate in Pay2 as a third-party payment initiation mechanism for a real-time payment to be initiated from a consumer's bank account into a business's bank account, they need to be accredited to do that on a separate framework to CDR. Yes, having a CDR accreditation does make that easier, but it is a separate accreditation. It's a separate set of costs. It's a separate set of assessments. And that's probably a price that we've paid for speed to market with Pay2 and some of the, I think, strengths of how that framework's been designed. But the price we will pay in long term is to continue to support two separate types of accreditation, and then thinking about how Scott Farrell's Future Directions of CDR recommended that payment initiation as a set of action initiation is absolutely something we should do, but he wasn't very prescriptive on how that should happen because he's very clever. So do we then think about CDR going, okay, we just want payment initiation, and as a bank, if you've got Pay2, then tick that box, that's good, there's no more you need to think about? Or is it going to be something else that we then need to think about, and will that operate alongside, in competition with, or completely separately to Pay2? So I, from my personal perspective for my company, I would like nothing more than to think about a future where Pay2 and CDR coexist under a framework which allows accreditation between both frameworks. But there are some fundamental design differences that have been made. We don't have a single repository for consent mandates in Australia. Pay2 does. It's called the Mandate Management Service. So there are some inconsistencies with that might need to be thought about more carefully.
Thanks, Lawrence. Any comments from your side?
I don't have any specific comments on the payment initiation point. Obviously, it is required in some jurisdictions and not in others, and consistent with a broad approach to open data, you would see that as an extension. I think the mandate management, consent management is key here. The user centricity would allow a very easy view of all the consents that are active for that user, and that an easy revocation of any and all consents, so that the user is not hunting around trying to revoke consents if there's been, for whatever reason, whether it's relationship breakdown or any other reason that a user has changing, or just a bad UX. The user no longer wishes to use that particular provider. That's absolutely key. And then I guess, to limit fraud around consents for people who've passed away and all those sort of issues. There needs to be really serious thought given by the registry holder or custodian of those consent type fields. And there needs to be, a lot of secrecy and security around that data.
That's excellent. And that's very good. And I think great you bring that point around protecting. And talking about, we've spent a fair bit of time talking about how to grow this ecosystem, what incentives, what needs to put in place. As we head towards the end of this session, on what is worth protecting. And if you imagine, a few years from today, where we have a vibrant open data ecosystem with multiple sectors being part of it, one of the expected downsides is that data will flow from environment in which it is currently heavily protected, such as banks or trusted institutions, into environments which would not be that heavily protected, especially traditionally they haven't been. What springs to your mind, and from a regulatory perspective and from a consumer perspective, what facets would you think needs to be protecting in a couple of years from today? And what things we need to take care of? Simone?
I think that at a very, I guess, foundational level, we need to get the accreditation correct so that companies are operating in this space in a way that is compliant and secure. I think that we need to really think about the messages that we're giving to consumers. These are all new tools. Most people that I know don't sit around thinking about these things, but people will use a tool that is useful in their daily life. Being able to recognize what is a secure and appropriate versus a non-secure one is an extension of some of the awareness that people have now around being safe online. But that needs to get better, and it needs to be relevant to the tools that the consumer is using. I also think that we need, it's been mentioned a few times, the liability framework needs to be appropriate. And the, I suppose, addressing issues as they arise, and they will arise. We will have instances where there is a collective intake of breath as something goes a little bit awry and not according to plan. Really thinking through what the remediation is, I think, will be a really important thing. And finally, thinking through what type of assets are being created that are going to be the honeypots of the future. That's a really important thing as well.
Maybe just to pick up that point on liability, the IF has partnered with the OpenID Foundation, not only on the OpenID Foundation's technical standards, but also on principles for digital trust networks. That in one of the annexes there's some guidance on a possible liability framework that a digital trust network may wish to pick up and look at and embed in its scheme rules or other governance rules. And of course, there are other frameworks around it, trust over IP, governance frameworks, and so on. But that's the first framework that I've seen, our own one, the Principles for Digital Trust Networks, that's delved into the liability picture in as much detail. And that was put together with the assistance of Pinsent Masons, a British law firm.
Can I just add one point on that? I think that's such a really strong point to make, because what doesn't exist to support this growing industry is insurance. And without appropriate liability frameworks, it is very difficult to find insurers that are willing to participate at an industry-wide level. And that is going to be a real limiter of companies being able to participate and being able to participate at scale. It's already being a big issue for a lot of companies in the space. And I think that's one of the reasons, Lawrence, is that lack of, consistent and express liability frameworks.
I'll put a link in the chat.
That's excellent. We are at time. Thanks a lot. Please welcome me in thanking both Simone and Lawrence for tackling a fair number of complex topics, from consumers, regulators, complex regulatory framework, and sharing their thoughts and valuable insights. Thanks a lot, Simone and Lawrence.
Thank you, Saurabh. Thank you, Lawrence.
Thanks for having
Passing it back to you, Camilla.
Thank you very much, and thank you all for staying online. Let's take a deep breath and energize ourselves for the last session. And I have Nelixa De Luca here with me again. We've been covering a lot of different topics today, all the way from policy to use cases and so on and so forth. So lots of things to pick up on here. So Nelixa, this last discussion, we wanted to talk a little bit about, with all those different topics and what we covered today, where do we actually start? What is a practical point to start at? What do you think?
Thanks, Camilla. Well, that is definitely the big ticket question. And I have to say that the session this morning has given so much insight and food for thought and takeaways that there's lots that we can cover. For me, given my background, the starting point is always going to be that framework. What do you want to achieve? What is the end goal? And then work backwards as to how you get there. And I think one of the really important topics that has been raised today, and I heartily agree with, is this very grown-up conversation about ecosystem management and the commercial incentives. One of the big lessons learned from the UK-EU experience is that, you know, as idealistic as it is to have this data provided for free, it does not provide the right incentives to have a well-functioning, thriving, open banking, open finance, open data, wherever you want to be, ecosystem. And so my recommendation to any, you know, jurisdiction looking at this is think about that on day one. I don't have the answer. I don't think we necessarily have an answer in the UK and the EU, but without that consideration of how is the ecosystem supported and how can it grow going forward does need to be addressed very early on in the thinking and the conversation. And aligned to that is, again, where do you want to get to? Are you starting from the sort of top down, you know, consumer data, right, or the bottom up, open banking, open finance, open data? You know, there is merit in both approaches, but I think that given everything we've learned so far, having that vision of where you want to finish will help you build what you need in order to get to that end goal.
But one thing that I just wanted to come up with a question that I've been pondering when I'm sitting and listening to all those amazing speakers, and that is, how different do you think that is where EU and UK is compared to a country like Indonesia, for example? Because the starting points are quite different.
I think one of the biggest differences is expectation understanding from industry. One of the biggest challenges in this ecosystem, and what is absolutely necessary, and various speakers have touched upon it, is trust. You know, we know from the experiences locally here that wasn't there at the beginning. You know, everybody had to work at it, but that's not just between industry participants. It's actually trust between industry and the regulators, and having that sort of long-term vision, I think, helps that to grow, because everybody knows what is expected. I mean, we're at the moment moving to PSD3, but PSD3 is, you know, going to go to open finance, and then it might go to open data. We don't have that clarity. It's a piece of legislation, as I said before, that's not going to be in place for a number of years. And so we're in this situation now where actually it's going to be up to industry to continue to grow the open banking, open finance ecosystem. And then there's ancillary conversations about what that means for other sectors. And I absolutely concur with the comments already made by various people that, you know, that this sectoral approach with different rules and regulations is absolutely not going to be the right way to go, because it's going to lead to fragmentation. And I throw it out there, you know, food for thought, that maybe rather than talking about open banking, open finance, open data, actually what we should be talking about is access to data. How do we frame a working ecosystem about access to data? Who are going to be the participants in that ecosystem? And then you can frame the supervisory expectations, the authorization requirements, you know, liability around that access to data. Who can access it? Who can use it? You know, and that's something that, you know, I have mentioned before, but I throw it out there to this audience, you know, who may be thinking about where do we start? And maybe it's not to start at open banking or open finance, but it's to start at access, and then think about whether or not your payments functionality, which I think is equally important, because everybody always starts at account information and then adds in payments. You know, I question whether that is actually the right approach. But, you know, think about where your payments framework, your payments initiation framework should sit. And should it sit in, you know, a piece of legislation or regulation or rules or guidance that addresses both? Or does it need to be separate frameworks that have the right connectivity?
Interesting. At this point in time, also talking about this audience, please feel free if anybody would actually like to come on camera and comment or ask Elixir a question, share what you've been thinking so far. Nilixa, Walsey, anybody? Just turn your camera on, interrupt, that's fine. Otherwise, I'll ask Nilixa in the meantime, out of different developments across globally, actually, what are the most encouraging things that you're seeing within the open data space, the things that really is going in the right direction and that you think will create momentum and setting the scene right?
So I think definitely not reinventing the wheel, taking the lessons learned from other jurisdictions, that gives you the lessons learned, the what to do, what not to do. I would hope that it also minimizes the cost of implementation. And I think that's very important, for all sectors of the economy and industry. I think that thinking about the different use cases that are coming out in different markets and how that could be applicable to your jurisdiction is going to be really helpful. And then obviously there is this parallel conversation about digital identity. And I think that one of the challenges that we actually see in the UK and the EU is that we don't really have digital identity solutions, not holistically anyway. There are different jurisdictions that do. And I would say that those jurisdictions that do have digital identity have better functioning open banking ecosystems. And I think that's actually played out in what we've seen in Singapore, and then obviously what other jurisdictions are looking to do as well. I mean, part and parcel, and we touched upon this about, right at the very beginning, about inclusion and financial inclusion, then I think that that's a key driver in many jurisdictions that are not only looking to launch maybe open banking ecosystems, but are looking holistically at their financial services ecosystem and how they improve their own payment ecosystems. And open banking is one piece of that jigsaw, and identity is definitely the other.
Yeah, it's interesting. Digital identity is that theme through all the work we're doing. It's no project that it doesn't come up, but it's still such a big piece to solve for. And where also interoperability, there will be a leading theme.
Yeah, I think, sorry, can I just add, Camilla, before we move on? I think that moving conversation that we're now seeing to API first is also key. I personally see no reason, except for the limited exemptions that we've touched upon before, why, the screen scraping models need to continue. The security is much better in API first. The data functionality is much better in API first. You can have more holistic, better implemented ecosystems because you can aim for a better consistency of approach. I think the single API would be challenging, but there is a lot to be said about consistency of implementation. So you can have that one-to-many rather than one-to-one. In the UK, we have the open banking implementation entity that what's its governance body. I think that, jurisdictions should consider having some side body, whether it's their regulator or some other entity that actually owns the management of the ecosystem. And then obviously, as we touched upon, conformance, compliance, but actually that day-to-day, who is responsible rather than everybody doing it bilaterally is going to lead to better outcomes. And I just wanted to, pick up, because I think it's really important what Simone said about liability. Within the EU and the UK, we had insurance liability for AIS and PIS providers. Now, whether that has landed in the right place remains to be seen, but we actually had to build and go out, and this is when I was working at the regulator, insurance products, with the insurance industry, because they didn't exist. And I would say that probably this is an area that will be revisited in PSD3, because is insurance the right framework? Is that the right sort of protection within this ecosystem? I believe there is still a question mark over, because it's not, insurance products have excesses and exclusions, and this is not a product in where you want excesses and exclusions if you're talking about consumer protection. And I think that's going to be one of the conversations that does, get traction as we move forward in Europe.
Yep. Yeah, no, I agree. It's almost touches on that other topic that comes across all the vertical we're speaking around cybersecurity, something we haven't really touched on today, but it goes hand in hand with those very valuable data sets that sits within all those sectors. And I agree with Brad that we haven't probably imagined what product we can create if we start to cross use the sector data. So it will be an interesting conversation to have, and we'll continue to have this, Nelixa, in our working group that you're a part of. So it will be more to come. I will see if JC is actually on the call. Yes, to see, call out, I'll call you soon. Nelixa, do you have any last comments you would like to say before I hand over to JC?
No, absolutely. Thank you very much for the invitation and for giving the opportunity to listen to all the very knowledgeable people on the call today.
Oh, fantastic. Thank you, Nelixa. JC, it's been a great session today. So thank you very much for collaborating and setting this session up. Before I hand over to you, I'll say the content from today, we will work into a report and we will share with everybody. And we also encourage everybody to get in contact if you have any ideas or if you would take part in the work we're doing in this project and in this field. We're specifically looking at those around use cases. And another topic that we haven't really touched on today, but they came up in the ABAC meeting, JC, that happened back in May, was the, what shall I say, and use the correct word here, the challenges around data localization and different regulations around that in the world. And it's something that we're looking at in the EPA working groups also. So JC, I would like to hand over to you now.
Thank you, Camilla. Thank you very much. And so I believe it has been a very fruitful roundtable. And thanks to our speakers and panelists for giving us a clear understanding of what's happening, the current state of play in open banking and open data initiatives across the world, how these are developing in various markets, how regulators are approaching the challenges, how banks and fintechs are navigating these uncharted waters, and potential solutions to ensure interoperability across markets in our region. So I think the discussions have highlighted the importance of coordination and collaboration among the market players and the public and private sectors in order to accelerate the digitalization of finance while achieving interoperability. So I would like to thank you all for your contributions to our discussions. The key outcomes of our previous roundtable on open data have already been incorporated in the draft of the ABAC report to APEC finance ministers, which I have been furiously working on over the past 2 days. And we will be happy to incorporate any additional insights or update from today's discussion that Camilla and her team may wish to suggest. The draft report section in the report to finance ministers on open data provides a reference to the evolution of open banking to open data and various key elements, including the whole of government approach, the recognition of a standard and a level of harmonization for basic elements of open data in order to promote consistency, and allow firms to exchange technology, learnings, and practices globally. Also, the need to address challenges to effective participation of developing economies, such as lack of access to the digital world and insufficient literacy and implementation approaches, that also pay attention to the commercial aspects of open data in order to enable businesses to provide more significant benefits to consumers. That section of the report also makes a reference to the need for coordinated guidance from governments to agencies and private institutions in sharing customer data for the benefit of individuals. And that should be covering agreement on common standards, building the infrastructure, and solving critical legal, technical, and logistical problems. The report also mentions key principles, including those governing privacy, data sovereignty, and individual rights that need to be established to ensure alignment and consistency. The current wording of the recommendation in the report was drafted to be actionable. So for APEC members to encourage actions that would be tantamount to endorsement that then we in APFF and EPA Asia can then follow up to implement in collaboration with interested policymakers and regulators with the benefit of the political imprimatur from the finance ministers. The text of recommendation itself is as follows. So let me just read the text of the recommendation. We recommend that APEC finance ministers encourage collaboration among the financial industry, international organizations, and relevant public sector stakeholders in member economies to advance the development of open data systems, consistent standards with domestic regulatory control, and common principles of open data that can be applied across the region. As a first step, we suggest that conveners identify use cases to be prioritized for standardization, such as, for example, interoperable digital ID systems and bank account and transaction information, as well as ways to promote implementation of standards in member economies. So that's how it reads. Well, of course, you may have heard about the G20 finance ministers failing to make a joint statement the other day because of disputes over proposed language referring to the conflict over Ukraine. So this could probably also happen at the APEC finance ministers meeting in October. Fingers crossed, ministers will set aside politics to agree on things that are important to the region's economies like open data. But in the very likely event that they won't, we hope to have a chair's statement in the absence of a joint statement, and we will try to work with our APEC finance ministry colleagues, including our colleagues in the Thai Ministry of Finance, to have some kind of an endorsement to help us move forward. So in closing, let me thank our co-organizers, EPA Asia, which is also our host, the ASEAN Bankers Association and APFF, for collaborating with us in holding this event. My thanks, of course, to all our speakers and moderators for sharing their valuable time and knowledge with us today. So let me also thank all of you for joining us and participating in our discussions. So that's, let me declare on our side this roundtable adjourned. And thank you, Camilla.
Thank you, JC, and thank you, everyone. And we hope to see you soon again.